All right, testing 1 2 3, testing 1 2 3. I think we're good to go. All right. Hey everyone, hope you guys are all having a good morning here. Sorry for showing up a half an hour late. I felt like staying in bed just a tad bit longer here. But a lot of news coming out today. Big news, of course. What are we going to get as far as rate cuts? If you guys are just joining in the stream, please make sure to vote. I gave you guys 3 options. We're going to have 50 basis points of cuts, 25 basis points of cuts, or we're going to have 0 cuts here. And we're going to go through the odds and stuff like that because they have shifted a little bit. I got Bloomberg news behind me right here, just kind of whispering in the back of my ears, so if something does happen, I'll be there. And then at the same time, I do have CNBC ready to pop up onto the screen, so whenever rates do come out, you know, in about 2 hours basically, we'll be there, we'll be watching, and then we can see exactly what happens here because it will be very exciting, and I'm sure you guys will see that it will move the markets quite a bit. And instead of focusing specifically on Bitcoin today, we are going to be looking a lot more at the NASDAQ, SPY, Dow Jones, Bitcoin, Ethereum, you know, most of the larger market cap stuff that we talk about. And then we're also going to be looking at the dollar index and then oil prices here as well, because right now, everything is pretty much down a little bit. And you've been seeing assets across the board hit a level of resistance, basically a downward trend line over the past few days, and it's still coming back down. So before we get started, please make sure to like, subscribe, and comment. Comment as much as you can because the more you guys comment, even if it's worthless stuff, I appreciate it. And it does make the algorithm really push the stream out to more people, especially when I do these off-time streams, when I'm not streaming in the afternoon after everybody's get back home and they're cozy and whatnot. It's in the morning when people are at work, or you know, people might be just doing stuff like you know, working on a car or something like that. You know what I'm talking about. So please make sure to spam the chat if possible, like, subscribe, all the good stuff here. I have some tea for today. I had to wash this cup out this morning, but some tea, more tea over here with my nice all natural Amish honey that I got while visiting a friend out in Philadelphia. But yeah, good days ahead, right? So hey Villarat, thank you for being the first one in chat today. Hey Charlie, glad to see you guys. I got my limit order set. Now I'm going to take a dog swimming and pan for gold in the rain. It's actually pretty cloudy over here. I stayed up till like 2 o'clock last night and I got in bed and I was like, you know what? Something's wrong. I should be sleeping right now. All right, before we get started here, Loki wants to say hello. He's coming over here to get some treats. There you go, boy. I woke up this morning and he was like halfway sleeping on my belly and I wasn't able to breathe. So that was fun. Okay, let's get started here. Bitcoin is on its way down. We're kind of sitting on top of this 50-day moving average here. And what's right here? Hey, Monkey Cuh. Jonathan, happy to see my man. Tim in Rhode Island, always. Apparently, BlackRock and Microsoft is investing $30 billion into AI. I saw that. That's going to be interesting. This is why I'm invested in Microsoft. I've been investing in Microsoft more and more. I think they're just going to try to corner the AI market here. Google's going to try to do their thing, so it's not going to be antitrust, or it's not going to be they have a monopoly, of course. But Microsoft just seems like they're the leader right now in what AI can really do. And I want to take full advantage of that in my portfolio. Let's see. He's 10-year-old and looks like a pup. Ooh, that would be nice right there. I'm listening while I work. See, there you go. Lock Sky, happy to see you. Amish honey sounds good. Oh, Amish honey is freaking fantastic right here. It's always good stuff. Ooh, just a little bit hot right now. Oh, but it's Earl Grey tea. I haven't had Earl Grey in a long time. And hey, Geek Drum, big pump on the way. And James, hey Michael, what are your thoughts on COSPA? I never heard you speak about it. I speak about it every now and again. Basically, when somebody asks, but I never really go out of my way to talk about it. It's typically something I think of where like I'm happy to trade it during the cycle, but I don't know if I'm going to hold it for the long term just because it's an altcoin. That's basically my thoughts on most tokens out there. I do think it has an opportunity. I'm basically waiting for momentum to tell me I should do some longs on it. Typically, when I do talk about it, it's more of a day trade when I'm holding for 20 to 30 hours like we've been talking about, because it does have some really nice pops when it gets going. It's not there yet, but it can go over the next few days. Excuse me, next few weeks. Days is a little bit too close here. Not sure who owns OpenAI. OpenAI is owned by Microsoft, so they were in a partnership with Microsoft for a hot minute. But if you recall, a while ago, the board of OpenAI got rid of Sam Altman, and that led to just a flurry of fuckery going on, basically. And then the board members that fired him, most of them got like replaced. They had to step down. And then Microsoft took a more powerful position. So technically, it's like under Microsoft's umbrella. It's not like maybe completely owned by them, but Microsoft really controls most of it. So it was a very masterful move by the Microsoft CEO. Is it Microsoft CEO? Yeah, Microsoft CEO. Google is a good AI, but the people that make it are a little bit too woke, and so the data is more reflective of how the world should be instead of what the world really is. Remember, if you told it to make a picture of George Washington, it would make George Washington black at one point, and it just wouldn't make a white version of it because it wasn't, woke enough. And they lost some money because of that. But I think they fixed it up since then. They definitely fixed it up since then. So let's take a look at all the markets right now. As you guys can see, Bitcoin is resting on top of that 50-day moving average. We are trying to hold here for a bounce that can happen later on today. Short-term momentum daily is still looking okay at this point. Everything's still moving bullishly, I would say. Weekly chart's still bearish. I'm hoping that we can have a big move here. Even if we do see a drop down, right, a little bit more. Let me do it this way. With the way momentum's going, we have a good chance of bouncing back above the low 50s and still having the breakout sometime in October. So that's kind of the gist of what we're dealing with right now. I'm hoping we can just break out now and have a good time. The weekly chart is, of course, is still bullish, but there is going to be volatility, and it is going to be a high risk trade here today for any of you guys looking to make some trades. I think what I'm going to do is probably open up the week's account here, and then I'm also going to open up the, there we go open up the JumpX accounts, and we're just going to chill here, and we're going to watch some of these. I have a couple longs open. All the longs are not making any money right now. Arbitrum is down about 40% right now. This is definitely something of a longer term trade, so we are going to be holding this for about 2 to 3 weeks. We haven't done a swing trade in a while, but because the weekly chart here looks a little bit better, I'm just going to buy and hold and see what we can really get out of this. Now, as far as these trades that we have open on Futures Pro and Weeks, these ones are a little bit different. Let it kind of open up here. Ape is down 93% and Sundog is down 164%. They're not great at this point. You can see Bitcoin doing some fun right now, but these are going to be some long-term trades we're doing, and we're really going to be looking for some news to get these things back up. I'm not going to sell these for about 2 to 3 weeks here because the weekly charts on those are looking pretty good. I am expecting something of more of a pop. Maybe I didn't buy at the best time, of course, but I just wanted to buy them while I was live with you guys. And of course, we bought at the level of resistance up here. Let me show you guys right here. Still in that downtrend, still looking okay. But today, it's all about momentum. 1 hour momentum is coming down. You could already see that. 4 hour momentum has just started to come down here, so be careful a little bit. We might have a little bit more more of a dip. Really, these short-term technicals are going to be a little bit outdated pretty soon, just because whatever the FOMC does, the meeting, it's going to cause the markets to just absolutely spike or crash. I'm hoping we have a spike here, depending on if we get the 25 or the 50. It looks like we have a very close poll going on right now. If you guys haven't already, there's about 66 of you guys that have voted. How much is the Fed going to cut rates? 41% say 25, 46 say 50, and 13% say no cut. It's pretty darn close here, guys. So right now, basically, that's what's going on here as far as Bitcoin's concerned. Still looking okay, but again, we're pulling back a little bit, and this brings us to the stock market here. Dow Jones is also pulling back a little bit today. I mean, it basically reached all-time highs yesterday, right? So it still seems to be doing quite well. Let's see if we can continue the breakout here. Short term, excuse me, drinking all this tea. Short term, the MACD has been more bullish here. Everything still is in alignment to go up. The weekly charts are pretty interesting here. They've been very choppy. I mean, very, very choppy over the last few weeks. So that hasn't been the best because it doesn't give us a really clear signal of which way to go. And then let me go over here to the 1 hour chart. Excuse me, not the 1 hour chart, 15 for the stock market. And I need to go over here to, oh, it's just not going to have the, okay, that's fine. You can see we're resting on a level of support from back over here from Monday. Now, you're going to notice that most things right now, they are coming down a little bit. It's not the end of the world, but it is coming back down. The market opened up at 6:30 my time, so right here. Right here. Pop opened a little bit higher, then we just started coming back down. As far as the NASDAQ, I always think this is a little bit more exciting because it's tech. It looks pretty similar to Bitcoin. Bitcoin, NASDAQ, it's pretty similar. And at the same time, you're seeing this get rejected off of that trend line as well. But the NASDAQ is bearish, matching what Bitcoin is. This is why I'm so excited to see what the NASDAQ does today. The daily chart's still bullish here. The stochastic, all that stuff, all still good. We are, just like Bitcoin, resting on top of that 50-day moving average and a 20-day moving average. This could be a very volatile day for the NASDAQ, just like Bitcoin. So if the NASDAQ does go down, it's most likely going down like 2-3% today. On the flip side, if we have a breakout here, it's probably going up 2-3% today. So that volatility is just going to be here. We're going to have to get used to it. If you guys are trading options right now, just be very, very careful because that implied volatility is probably going to be high right now with everybody trading. And then finally going over here to the SPY. Again, a little bit different than the NASDAQ, a little bit more of a bullish pattern I see. Again, everything's still bullish in the daily charts. Weekly charts are bearish right now, which is not the best sign. But of course, same as Bitcoin, we're trying to get out of that. And you're seeing momentum go back up slowly. Not enough to get you really excited, but, you know, we're there a little bit. And let me go over here to the 5-minute chart, I would say, for this one. And then let me go to extended trading hours. Not really much of a move here this morning, but during pre-market, once the market opened back up, came back down, and just like everything else, we're kind of riding on a support level right now. So everything's kind of waiting. You're actually seeing a little bit of a bounce here. It's kind of calm. You would expect this is some terrible move. No, the SPY is basically down 0.18%, 0.16%. We're not in a catastrophic mode. Everybody's just kind of in a wait and see. We all kind of know what we're expecting. The only question is 25 basis points, 50 basis points. What exactly are we going to get? And that brings us over here. The odds have changed a little bit. Let me actually pull this up for you. There we go. The odds have changed just a tad. Instead of being at 65%, which they were last night for the 50 basis point cut, now we are at 50% chance of a 50 basis point cut and a 43% chance at the 25 basis point cut here. Again, go back from a month ago, we've gone from 25% to 57%, and we've gone to 75% to 43%. So things have changed a little bit here, and the market really doesn't know. And nobody knows, but you know what? We're going to be waiting. And just as a little bit of a recap here, I have Bloomberg behind me on the TV back over here, so if anything happens, I'm there. And then once we get the announcement, I do have this ready to go, and you guys will see CNBC being talked about or being played quite a bit today, so just be aware of that. Now, as far as news is concerned and everything like that, everything is going to be dominated by the Fed today, guys. Every single thing. Stocks a little changed. What I want to talk about here is coming back down here. The Fed is expected to deliver its latest policy decision at 2 p.m. Eastern time. That's in about an hour and 50 minutes, basically. The central bank is expected to lower rates by at least a 0.25 percentage point. They're saying at least, so I think everybody has the door open for it potentially being the 50 basis point cut. CME's Group Fed Watch tool shows traders pricing in a 56% chance of a half-point cut and 44% chances of a quarter-point move. That's exactly what we were just talking about here. 57 to 43 might have moved up a little bit. Moved down. Actually, it moved up a little bit since they made this article. And they go on to say it's unusual to have this much uncertainty into a Fed decision, as the central bank typically tries to telegraph its next move to the markets. Now, this right here is probably the most interesting thing, I would say. And that's because if the market really doesn't know what's going on, there are people placing bets both ways. So there are people placing bets for the 25 basis point cut or the 50. And whichever side is going to be surprised here, it's going to be one of them, of course, or both if we have a no cut. I'm hoping we don't have a no cut. What's going to happen here is you guys are going to notice a very violent reaction to this decision, basically. So we're going to be watching this pretty closely. There's another article talking about what to expect here. It's all everybody just saying, hey, we're probably going to see this. We might see this. The dot plot's going to be interesting here. Most of it's fine. All you guys really have to understand is we're having rate cuts. These rate cuts are going to drive a lot of volume and a lot of movement here with a lot of our favorite assets. And so if you guys are looking to do any day trades and stuff like that, just be a little bit careful. We're going to be looking for some setups here pretty soon. As far as I see, I'm looking at a bearish trend on the 1 hour, and I'm looking at a bearish trend on the 4 hour. But right now, we're just at so many clusters of support, whether you call it the 20 moving average, the 200, the 50 on Bitcoin on the 4-hour chart, or if you go over here to the daily chart, we're right there at the 50. No matter what happens, if we have a bad day here, we're coming probably all the way back down to like 58,000. So that's what you guys have to prepare for on the downward side. On the bullish side, we can go up as much as probably about like $63,000. So that'd be a massive move. And today is one of those days where you can have those massive moves. But again, I'm going to look for a nice little trade here. I'm thinking I'd rather go long than short here, but I want to buy a little bit closer to the actual decision, and we'll kind of let the trade work out. Right now, I think it might be better to do a little bit of a, a little bit of a long scalp, but I don't think that's going to really, make me excited to actually do the open trade. So at this point, I'm going to hide the stochastic, hide the RSI, and we're just going to go over some of the other plays for today. Maybe the 4-hour chart will do the best here. I think that'd do it. Ethereum not making any huge moves like Bitcoin over the last few days. Ethereum has been pretty meh. Solana, pretty meh. Almost at a breakout as well, but let's give it some more time here. Dogecoin, a bunch of other tokens out there, they're not making huge moves. In fact, some tokens like STMX, they're down a little bit more today. Milady tokens down a little bit after a nice pop last night. You're seeing a lot of those tokens that had really good days yesterday coming back down a little bit. I see one exception here is Cost, but this one seems to be making a pretty nice move here. I don't know what happened. Maybe it got listed somewhere new, but basically it popped up over 35%, and within just a couple hours, 4 hours basically. Luna's down a little bit more, but you see how everything kind of moved up after yesterday. I even see Mod coming back down after a nice move, Turbo coming back down after a very, very nice move. It actually hit that resistance level and it came back down. Yeah. We're still going to have a little bit of issues today, but that's fine. Pretty much this rate cut's going to change everything. It's going to make things so nice for us. All right, push this right there, poke that around. And then a couple more things. Remember, this is the first time we're going to be cutting in a while. The last time we cut before COVID was back over here in 2019. The market got a little bit rocky, but eventually it just kept on going up and we reached all-time highs again. So that's kind of what I'm hoping for this time. Maybe I should just go over here and do the good old SPY chart. And then probably for this one, let me just, yeah, there we go. Just so you guys recall, the last time we had a cut in this type of economy, it was back over here. You see, we had a pretty nasty wick actually on that month right here. And then we kept on coming back up. That's basically what happened with the rate cuts. So just so you guys know, as long as the economy stays good and we're cutting rates, the market should in theory move up. Now, if we go into a recession, of course, it's going to look like that, or it's going to look like that, or it's going to look like that. But I don't see a dot-com bubble. I don't see a financial crisis. I don't see a pandemic coming along anytime soon. Now, but we can see, and we're finally going to have our cuts here today. So it's going to be a big, big day, everybody. All right, let me take a little sip of tea here. Let me see what the polls are saying right now. 47% say 25 basis point, 39% say 50 basis point, and 13% still say no cut here. Chair Powell is the man. He is going to be so important. So basically, we're going to hear the announcement in about a couple hours here, maybe an hour and 40 minutes or something like that. After that, we are going to be very much listening to every word that comes out of his mouth. I will put him on the big screen here, and we are going to listen to everything. And we're going to see how the market reacts to him, because as you guys know, everybody's going to be listening very, very closely, because no matter which decision he makes, let's say he does 25 or 50, let's stick with those two. No matter which decision he ends up choosing, he's going to have to answer for it in that press conference. So let's take the more, the easier path for him to do, maybe despite the data, but the easier path for him to do, which is the 25% cut, or it's 25 basis point cut, excuse me. If he does that, he'll basically say, hey, the economy is still very strong, and then we have to just keep on cutting rates, and we're still going to be data dependent. We're still going to be checking out the data, but we think right now the economy is strong enough, and we don't want to see a reacceleration of inflation. And that's basically going to be his argument. If he does 50, it's going to be a little bit more difficult for him, all right? Because he's going to have to admit that maybe he made a little bit of a mistake. He's not going to say, I made a mistake, but he's going to have to infer that a little bit here. Because remember, The people that are expecting a 50 basis point cut, like myself, we think that the Fed is behind the curve. We think they are lagging a little bit too much from where the real economy is. You're seeing a potential credit crunch coming up. You're also seeing a few issues as far as people losing their jobs. Remember, manufacturing jobs have been going down. It's not like manufacturing jobs have been going up. The government lied about 800,000 jobs that just magically disappeared. It hasn't been like the best economy ever, you know, and we have seen it slowing down more and more and more. The only way we're really holding up right now is because hospitals are still hiring and governments are really hiring. Governments are hiring a lot right now, and a little bit of construction as well. So if he does the 50, he's going to have to say, basically, we want to make sure that we're not lagging behind like we did with the transitory talk back in, 2022. We want to make sure that we're ahead of the curve. We think the economy is strong, but we don't think this is going to lead to higher inflation. We want to make sure that the job numbers stay strong, and we don't want to risk going into a recession. He's going to have to say that in a much nicer way where he doesn't even mention recession. He's going to talk about market like the, slow down is probably the word he's going to be using. And so he's going to have to play a little bit of a tougher game. So the easy way for him is to do 25 basis point cut. More difficult way, but I think the better way for the overall economy and everybody living in America that has a job is going to be the 50 basis point cut, because it's kind of more like, do you want short-term pleasure and maybe a little bit more medium-term pain, or do you want short-term pain or annoyance, whatever you want to call it? I'd say pain, and then you get some more medium and long-term, happiness, basically. Because if the economy goes into recession, he's blown it. He will forever be that guy that fucked up the economy twice. Transitory on one side and then held rates too high on the other. So high inflation, high unemployment. It's going to destroy his reputation. So I'm hoping he thinks about it more in the long term here. And of course, we all know the economy is not as great as the news says. It's just not there. For heaven's sakes, I was watching CNBC the other day, and they were freaking out about how McDonald's is keeping their $5 meal deal or something like that. And I'm like, yeah, they should. Fucking McDonald's is expensive these days. I haven't been to McDonald's in quite a while here, but no, I did. I got McDonald's. I was hanging out with the guys from Tron after we all got plastered drunk in Nashville, and my buddy Hunter, he bought me some McDonald's. It was fantastic. I didn't pay for it, but I saw the bill. The bill for like 5 people was over $100. So, it's kind of crazy these days, especially if you want a meal and stuff. I'd rather just go to Applebee's. Simple. Applebee's has beer. McDonald's doesn't have beer. Shit, Powell is never ahead of the curve. The boy is the curb, and we're all now screwed around the corner. Hey, I'm trying to give him some benefit of the doubt, but yes, I do not believe that Jerome Powell is necessarily the best Federal Reserve chairman that we've had. The confidence when he was saying transitory was otherworldly. He was like, no, this inflation is not going to last for a while. We don't have to raise rates. This is going to take some time, but it's not going to last for a while. And then boom, you saw what happened there. I think, again, we have to go back in time, and you guys have to understand why he is like this, though. Why he's like this. Back in the 80s over here, remember, Jerome Powell's a very old man. He lived through a lot of shit, okay? I shouldn't say old, but he's lived through some shit. Back over here, back in the 70s and 80s, there was a period of inflation that was very, very bad, right? And then what happened? They talked about how it wasn't too bad. It kept on going higher and higher and higher. They had to raise rates quite a bit. And you saw how after they rose rates, inflation started to come back down and stuff like that. But they cut rates. And then they cut rates too early. And then inflation came back up. That's his big word. In the back of his mind, that's what he's terrified about right now. When in reality, he should be more terrified about the economy going into full-blown recession, because his term is almost over, and he already blew inflation once. Now, this is the interest rate here, so you can see how the interest rates soared all the way up to 20%. Again, look at where we are right now. We're all the way back over here. We're not so high. Back over here in the 80s, holy shit, can you imagine a 20% interest rate? Can you imagine that? They were slowing shit down hard. Now, go over here to where be it. There we go. So this is the last year, but let's go to Max. See back over here in the 80s? Inflation soared, came back down, then soared again. He doesn't want to have that happen. That's, from his point of view, this is what he's really trying to stop. At this point, I just think it's so much different. You can see back over here in the 40s and 50s, we also had a big peak, came back down, then we spiked again, came back down a lot, then spiked again. It was very, very volatile. But I mean, for heaven's sakes, that's kind of like post-World War II type stuff, not, you know, a little bit different. We've usually been having better inflation over the past, 20, 25 years here. But he doesn't want to see that come back up. I also don't want to see it dip down, though. That's what me and him different. I think it'd be more prudent to have the 50 basis point cut, but that's not what the poll question asks. The poll question asks is what they're going to do today. And right now, 47% 25, 40% 50, 12% no cut. So we're seeing more people come in and vote. It's definitely just going to be one of those monster days here. But man, look at this, that was inflation. This is inflation over the last 10 years, last 5 years. You can see COVID right there at the beginning. And you can see how we just took off. We spent too much money, too much stimulus into the economy. Remember, both Trump and Biden back at the end of 2020 before the election, they are both promising more stimulus because they wanted those stimulus votes. And then boom, you just see inflation take off. Remember, and again, they tried to restrict fracking and oil production. And of course, if you guys remember, oil prices went freaking insane. So everything was just mixing up and being bad. Like, they put too many bad policies together. If one bad policy comes along, the economy can handle it. Two bad policies, yeah. But I think there was like 4 or 5 bad policies that all came together, and it just screwed everything up. But it did give us some nice things here as far as, people were able to quit their jobs and go find another job very quickly. They could ask for more money, and they would get more money. So there was some benefits of it. But of course, if everybody's making more money, you see somebody has to pay for it, and it's usually you. All right. Now, a couple other things here. I was looking on Twitter to see if there's anything about the Fed right now. No, but apparently Hezbollah, this is kind of the terrorist watch, or the what would you call it? Just a wild card to be watching over the next few days in case something really bad happens over in the Middle East. Israel is just going off on the terrorists right now. Basically, they've been having explosives all throughout all this electronic equipment. So I think yesterday it was pagers that were exploding. Today it's walkie-talkies that are exploding. So I'm not going to play the videos all too much because, YouTube might not like it. But you can see things are on fire, shit's going down. Hundreds of fresh explosions reported across Lebanon 24 hours after 4,000 pagers exploded, killing 12 and injuring over 3,000 Hezbollah terrorists. Fresh explosions are now taking place in handheld walkie-talkies. Oh dear Lord. I mean, just talk about how wild this is going to be over the next few days. I mean, look at just like people flicking around. I mean, you can look at this on Twitter. I can't show too much of it to you. Right? A friend of mine's rucksack exploded while his pager was in it. Like, a whole bunch of stuff here. A whole bunch of stuff is going to be happening. There was rumors that there was a bomb found by Trump's rally this morning, but it says, I saw an article saying that maybe it's not true, so I'll kind of be looking for more stuff here in the future to talk about this. I keep on seeing notes saying it's not true, but I haven't seen one that's actually been approved yet. But yeah, so keep an eye on this one. If there was really, here's raw news alerts. Law enforcement have reportedly found explosives in a car near the rally hours before Trump is set to speak. According to the Nassau County Police Department, the perimeter of the rally site was breached after explosives were found near the, probably the entrance, something like that. Right? The NCPD issued a statement saying the reports of explosions being found at the site are unfounded. So we'll see what happens here, which one it is. Nassau County Police Department, NCPD, right? We'll see. I don't know if it's New York City versus Nassau County. We'll wait. But that could be another big thing here because I wouldn't be surprised. But again, it's they're going after Trump hard these days. All right. Let's just do a quick little cap off of what's happening with the markets. Right now, everything is trying to bounce off of these short-term support levels. So you see the Dow trying to bounce off, the NASDAQ trying to bounce off, and the SPY trying to bounce off right now. Bitcoin, a little bit more simple, trying to bounce off, but more of moving averages. The support level is a little bit lower here. So things are trying to get good in the next hour and a half that we have. So it's going to be pretty interesting. Now, let me get out of some of these extra tabs here as far as stories and whatnot. There was one more thing I wanted to talk to you guys about here. Where was it? Do they not have it anymore? That's fine. Basically, you guys have been seeing that more and more companies are starting to put their people back to work in the offices. Amazon is joining that here, and you may see a little bit of a resurgence to some of these ma and pa businesses, and I'm hoping that kind of spurs the economy a little bit here. Maybe not so much the gig economy as far as the Uber drivers and the DoorDash drivers who take food and stuff to them, at their house, but that may give a little more of a spur to the economy here coming up, and especially out here in the Seattle area where we're having strikes left and right. JP gonna stir the pot today, boy. JP Morgan, he needs to decide what he wants to be, because he's been saying it's been bearish for like the last few years. Recession's coming. You can't keep saying that, and if it doesn't happen, you kind of have to adjust your thought process, or just say, you've been wrong so far. He keeps on saying the same thing over and over again. But you know what? We're going to see what happens, especially as we go into 2025. It's going to be a very, very volatile time. There's so much money in the system right now. People forget that the whole economy can really, stocks can drop like 40, 50% very, very easily. I think, what was the number like? Wasn't like 60% of all money printed in history printed over like the last 5 years? I mean, through COVID. That's why everything is so crazy. Remember, let me pull up this for you guys very fast. Let me go over here to what list I want to do. There you go. If we go back over here, I always show Meta, because Meta is like that case where if the market really doesn't like something, no matter how much money it's making, you can see that it can really drop down. People really forget. And again, once it goes good again, you can see it's in its good graces. You can see a potential breakout happening with Meta, where Meta can just skyrocket up to like $600 here. It looks nice now, but back over here, Meta fell about 77%. Okay, that can happen with a lot of different assets out there. Here's Macy and stuff like that. You can see when the market doesn't like you, Macy's fell down about 94% at the worst, and of course that was partially because of COVID right there. But you can see when the market does not like you, it can go down very, very quickly. Even go over here to JP Morgan, right? Not as bad of a move, because of course it's a bank, and banks usually have a lot of government support behind them, especially something like this. But if the market doesn't like you because of interest rates or whatever, 41%. You can see more than just this 20%, 30% correction that every time I'm on CNBC and they talk about it. Oh yeah, the market, if at worst, it would just drop 20% during a recession, 30%. No, it can go 50, 60, 70%. Even going over here to NVIDIA. Oh my God, if NVIDIA ever has a really bad day, it's going to just absolutely dump. And I don't think people realize this is, once you have a big move like that, it's very easy for all that money to come flushing out. They've done a very good job. They've made a lot of people, including me, maybe some of you guys, a lot of money here. And that's absolutely fantastic. But if they start to waver there on their earnings, it's going to just be bad. Now, again, back over here with high interest rates, it fell down 70%. Just imagine what happens if we come back over here to our next level of support. The support level right here. Let's do this. High to low right there. That's 45% support. Over here, 72. All right. So you could definitely see a big flush out here. With NVIDIA, I don't even think it might fall that much, because so many people are going to be clamoring to buy it every dip there is. But you still see that, if the market doesn't like you, you can really come back down. Oil, it's still doing fine. I love my oil plays. I'm going to stick with them for a while. Visa, still doing great. I told you guys love Visa for a long time. Devon Energy, not so hot. Chevron, not so hot. CVS, not so hot at all. So just be prepared. This is where I think Jamie Dimon might have some, well, if he was able to articulate himself a little bit better on this point, I think people would maybe listen to him a little bit more. But this is what I just want to tell you guys. The market is never as strong as you guys think. But while the gravy train is going, you got to take full advantage of that sucker. And look at this month. So far this month, which is September, which is supposed to be a really bad month for crypto, we're in a green month so far. SPY, green month so far. NASDAQ, red month so far. Dow Jones, green month so far. So overall, we're doing a lot better than I think we anticipated. And still, with some of these charts here, we're still seeing some short-term popping. If it's no cuts, it's just going to crash everything. Definitely, that's correct. You thought it was pagers? So yeah, so it's pagers right now, and today is walkie-talkie. Yesterday pagers, today is walkie-talkie, and yeah. So apparently nobody's taking credit for it yet, but I'm pretty sure it's Israel. I'm pretty sure Israel is going after the terrorist. Not sure what we just watched there. All types of electronic devices owned by Hezbollah operatives are now blowing up in Lebanon and the region. Apart from the pagers and walkie-talkies, other devices such as fingerprint devices, solar power systems, and radios are now exploding too. What type of crazy technology is this? You know, it reminds me of that scene back in Cars where they had that beam that like lit on fire, like this special type of gas in the cars. Reminds me of that. Like, I wonder if the Israel has some type of super secret space satellite just sending down some beam and just blowing up everybody's pagers and shit. I mean, damn. Imagine you're at the ATM, you put your card in, as soon as you put your card in, the ATM explodes. I mean, that's just absolutely wild. And it's gonna, look at, more of this is gonna be happening here. I mean, the fact that like Israel is just going berserk right now with this type of stuff. They are not playing games. They are just saying, hey, boom, we're taking you out. Imagine being afraid to use your phone. I mean, that, you know, remember Law-Abiding Citizen? She picks up the phone and psh, that's basically what I see right there. And hey, Charlie, happy to see my man. They're very, very wild. Crypto Trees propaganda? Oh, psh, I don't even know. What do you call it? We'll have to wait and see, but I'm looking at that and I'm like, damn, I would not want to be out there right now. I'm happy to be in my chair in my house, listening to Bloomberg behind me, watching CNBC on my side monitor over here, and talking with you fine people. But yeah, I do not want to be over in Lebanon right now. Always figured your Facebook and personalized cell phone is a great way to localize a cruise missile. Hey, if anybody's going to do it, the Israeli Defense Force is really, they're taking full advantage. Cat Laser Eye Tech. Hey, it's going to be, it's just going to be wild. But I do want to make this an important thing. They're doing all this stuff. Eventually, Iran is going to have to retaliate, right? Like, I would almost be surprised if Israel didn't do this same thing to Iran. Whatever this technology is, whatever they're doing, they need to do it to Iran as well. Iran will be freaking out, and it's a good way to get back at them for all the stuff going on right now. But will America let them do that? I don't know. I don't even know if America's letting them do this, actually. This is just stirring the pot. But, you know, if we do have something more of an escalation out there in the Middle East, this will be an issue for us over here for a couple reasons. First of all, let's say that, you know, you see all this stuff going on, and things escalate. Well, you're probably going to see oil prices escalate, which means you're going to see gas prices go up. As gas prices go up, you're probably going to see inflation spike up a little bit. And if inflation spikes up a little bit, you may see the Fed have to change its posture about how it cuts rates. I don't think it should, but it probably will. Now, if he does a 25 basis point cut and we see inflation go up because of Middle East tensions, he'll say, see, this is why I only did a 25 basis point cut. But if we do a 50, you know, and we have this, I think that's probably the better way to go. But I mean, you can just, here, let me just play this video. Can't play the audio, but see the little, boo, I mean, thing, you know, you just don't want to be by technology right now. You just don't want to be by technology. Donald Trump was almost assassinated again here a couple days ago. The world is just crazy. You know what the calm part of the conflict is right now? It's Ukraine. Ukraine is where the calm things are happening right now. That's why everybody's like, you know what? You know, we're just not going to talk about it. There's like some war going on over there. We're going to be talking about money and funding, not actually about like, you know, actual battles and, you know, large scale conflicts going on. Israel knows how to put on a show as far as like this this type of stuff. All right, pour myself another little cup of tea here. I need tea to survive in the morning, or coffee, but I didn't feel like cleaning my French press. Let's see. Donald J. Trump looking sharp, my brother. Your thoughts? Let me see what this is looking like so far. I mean, so far it's actually crashing pretty much. That's not looking good at all. Yeah, things still been coming down. It's at a level of support here. We'll see what happens. But I mean, Trump has been on Twitter a lot more lately as well, so I don't know how much longer this thing is really going to hold up. He said he's not going to sell his assets here, but I mean, we're going back to some really crazy low levels. We have back over here in January when you took over, you know, you saw that big move. Everybody's pretty much sold off, and somebody's making a profit off of this, but I'm not entirely sure who. If you want to see who's profiting off of the DJT, close. There you go. It's not profitable right now. The short flow is around 20%. Didn't even have too much of a pop after the assassination attempt either. A little bit of a pop. Yeah, a little bit of a pop, but not really much. So Novachky Vladimir, he sold off some. Huhan Philip, CFO and treasurer, he sold off over 2 million. Glebe Scott has sold it for 92,000. General counsel, basically. Northwall Andrew sold off a little bit. Noon Devon G. Oh, Nunes, that guy was this guy was a politician. I know this guy was a politician. Let's go with that one. Is this updated at all? Let me just double check before I take this down. Oh, it's still loading up. 55.45. The odds are changing even now. All right, so yeah, that's him. That's the dude. He looks almost like an AI person, but yeah. Yeah, he was in office until 2022. Yeah, okay, there we go. But yeah, but that thing looks pretty rough. Maybe you're talking about the crypto token though. Do you think cuts are going to cause the markets to go up and down? Depends on the cut. Right now, if we're more likely than not, we're going to see the market go up and not down based off of these cuts because the economy is still strong. We're probably looking for an up here. You're making the right move by leaving the USA? Oh yeah, I'm going to be living in Thailand. I'm going to be living my life. Oh my God, you know how cheap Thailand is? You know how just peaceful it is out there? If you want to have a really nice day or a really nice night out in Seattle, you know, it takes me about $100 to get up there with my Uber because I live like, you know, 40 minutes away. Then your dinner is probably going to cost about $100 to $150, including drinks. You know, I'm talking about a cheap steak for $125. You get drinks there as well. I mean, like a nice steak would cost about $125. And then if you want to go to the bar afterwards, that might cost you, depending on the bar, a classy but maybe cheaper bar. Maybe you can go for something like maybe $100 for the night. Then you can get up to like $500 a night at certain bars, which I love those bars, but I don't love those prices. Hoping for a dual stream during FOMC. What do you call dual stream? What's a dual stream? Oh, I will have here. When the announcement comes out, when the announcement comes out, I have this right here. So we're going to plop this up. I'll move this around. I'll make it larger, smaller, whatever we have to do, you know. Well, I can't play the commercials. That's a no-go here. But I'll have that ready to go. And as soon as the announcement comes out, we're going to be listening to what CNBC says. And then at the same time, we are going to be listening to the press conference as well. So everything is all laid out. It's basically how we just have to wait and kind of see. That's basically what's going on right now. Is the Zinger double down any good? We just got it at KFC in Cambodia and Buddha order it for delivery, Els. I haven't had KFC in years. I can't remember the last time I had KFC. I like it. I like the flavor and stuff, but like I haven't been to KFC in just such a long time. The KFCs that I know about, they're all like half KFC, half A&W hamburger place. I haven't had KFC in forever. Bro, if we 75, we nuke, I think. That'd be a glorious moment. I'd love to see something like that. But if it was 75 basis points, like, people are already going to panic if he does 50 a little bit. Like, oh my God, there's something really bad happening. But if he does 75, everybody's like, oh my God, he must see something that we just can't see. We have to sell off now. I mean, it could be crazy. Or people are like, oh my God, he sees he's so behind the curve that he just needs to pump it up. I don't know, but it would, that'd be a good one right there. You plan to live trade? Yeah, if I see something right now, I told you guys I'd just be opening up a small long scalp here at the beginning of the stream, but I haven't really seen a need to go into it so far. Right now, you're seeing this general over here to the hour chart. You're seeing this general little downtrend right here, right? We're kind of bumping up a little bit too fast. I'm gonna have to do something more of an organic play unless we get something of a larger pop. But I mean, what, we got an hour and 15 minutes until we get that announcement. It's going to happen in the next hourly candle, basically here pretty soon. What we have open for trades is Ape token. I have a long here with a 20x leverage, Sundog, but that's a kind of a test trade that I'm doing right now. And then we have an Arbitrum long right now too. We can open up a Bitcoin long if you want to on here. Let's see what it might be. Part of me still wants to short Ethereum. This is my trouble. I think we might have a short-term pop, but I really want to short Ethereum. Like, I really want to short Ethereum. And that's mostly because of this trend line right here. I'm just going to wait to see what happens. But I mean, you can see what's basically, what was that little, there you go. We're on the edge. We're on the edge. We're either going to bounce off and go to heaven, or we're just going to go down to hell over here. So, going to be interesting. What's moving up today? Big time is still moving up quite a bit today. I mean, let's see. This is a weekly chart. It's cooling off a little bit, actually. BNX. Is anything actually making a move right now that that hasn't really moved too much? Looks. I used to trade Looks quite a bit. How's this doing? No, that's not looking great. Ape, Ton, Meme. How's Meme doing right now? I mean, most of these tokens don't look necessarily too good. Here, let me go over to Coin Market Cap here. Oh, Jesus, this is not the Coin Market Cap that I know. Hold on. This is on a different Windows account. There we go. The dark mode is so much better. All right, last 24 hours, what's up? CKB is making some moves here. Binary X is making a little bit of a move. Leo, SUI. Sui's been doing pretty well. We can see if we can long that here. Maybe CKB at the same time. So how is CKB over here? Still up 7%. It was up 15% yesterday though. So how's the 1 hour chart look? No, see, everything looks kind of fucked up right now. It's look at, you can see the breakout happen. It was beautiful, but it came right back down. I mean, right back down. I'm not going to trade something that doesn't look good. BNX. Oh, 0% fees right now too. Oh, nothing looks juicy. All right, you know what? When in doubt, let's just long Bitcoin here, okay? Now, if we're going to go off of a Bitcoin trade like this and we're expecting a cut and we're hoping for something nice to occur off of today, I would say that it's better to go over here and look at the 4 hour chart. The lowest we've been over the last few hours is about 57.5. I think that's probably going to be a good level. Let's go over here. Let's go long. Let's do a 20x leverage. Let's not be crazy people here. And let's just do $1,000 long. And we'll just kind of watch this play out. I think this is worth taking a little bit of a look here. Now for Bitcoin, let's go to entire, yes, and let's go to 57.5. So if it drops down, we'll lose about $769. Target price here, this is going to make it a little bit more interesting. And again, this is a 4 hour chart, so we kind of have to zoom out a little bit. We popped up here to 61,389. Why don't we try to go up here towards around 63,000? It's not too close to the 65,000. That's going to be really difficult, but it's enough to get people salivating. So let's go to $63,000 here. And this will be something we might probably hold for again 20 to 30 hours here. As far as day trades, we have to look a little bit more. We have to look more for shorts there because the 4 hour chart's still bearish. And then we'll be making $1,000 on that side. Not the best ratio, but I think we can take it. And we'll just kind of keep track of it on the JumpX charts. If you guys are looking for a leverage exchange, JumpX is, I have a link down below. Yeah, and we'll just keep track of this right here. All right, push this down a little bit more. Let's go back over here, and then we don't really need this trend line here. I don't like it. Basically, that's the trend line you guys should care about here. Nasdaq still bouncing. Dow, my voice is cracking. The Dow seems to be a little bit more bullish. Like the Dow right now is positive for the day. The SPY just turned positive for the day after that rough beginning here. The Nasdaq is still a little bit iffy, kind of like Bitcoin, still a little bit more iffy here. Baby Doge is still good after that massive rally over the last few days. I mean, that thing is going crazy here. There we go. As far as scalping, let me see what I can find here. Actually, let me just do this. Let me load layout. There's market cipher day trading set up here. What is this extra one? I don't think we need another MACD here, right? Yeah, we don't need a MACD. All right, so let's start off with the 4 hours, 1 hour, 15, and then 5. And then 4 hour momentum is, how is 4 hour momentum? It's turning bearish right now, which isn't the best. 1 hour chart's been better than the 4 hour chart. Well, the 4 hour chart gave us 1. We'll have to see if we can continue going higher. The 4 hour was calm for a little bit, yeah. It's mostly because that big jolt we had last night or yesterday. Nothing is aligned right now. If the hourly was bullish, I'd probably hop on board here and actually do a long. But basically what you're doing at this point, because the market's so choppy, you're basically putting in a trade that you're probably going to hold about an hour and a half, probably up until the announcement. And then once Jerome Powell's speech starts, that's most likely when or his press conference, that's basically when you guys are going to close the trade. Now, if there's something really volatile going on here, we can probably... Anything moving, nothing's even popping in the last hour. Popcat. Let me check out Popcat here. I know I have this on my list. The liquidity always scares me with Popcat. Not really doing much here. Nah, that's not going to do it. There's nothing really beautiful to trade right now. Maybe on the stock market there might be something here. But yeah, nothing really else is like actually saying, wow, look at this trading opportunity. Baby Doge still sideways. You'd basically be looking for like quarter point scalps, like 0.25% moves in the market, and you'd have like 100x leverage, so you'd be able to do your 25% profit. That'd be kind of expensive with fees though, which is typically why I don't do it too much. We did some day trades a couple days ago and those worked out fine, but again, the fees can eat you up. 100x LOL, oh my god, you can do it 100x leverage. I mean, I've done 100x leverage, it's fine, but it's just that if the trade goes against you and you don't have a stop loss or some way to protect yourself, it can really get crazy in a heartbeat. The last, let me see. I know if I go over to my account here, I have a trade that I posted a while ago. I think it was the trade where it was just okay. Community. Yeah, here's one. 100x long. I only made 13% after fees and stuff. I think I made like 20 bucks. And I closed it. I closed it early because Bitcoin looked like it was getting rejected, and I just wanted to take my profit and run. I don't think there's been much else here. No, just the polls and stuff like that. But yeah, it's you know, I think, and plus right now, the 2 longs I have, these are definitely longer term holds. The one over here, I mean, we got the Bitcoin trade, but I also have an Arbitrum that I bought last night, right? So we're up like 0.53%. 0.8, but you know, we still got to wait a little bit here. We'll let that be the trade for now. Just Bitcoin long after Bitcoin's kind of dropped down a little bit here. And hey, Ed, happy to see you, my man. Hope you're doing well. I plan to short the market. Seem nervous. Whatever you do, just be prepared that we're going to have some volatility here, okay? Right now, on the shorter time frames and even on the weekly time frames, the momentum is showing a bearish move. But when we have these Fed rate cuts and stuff like that, you're definitely just going to see a lot more moves, a lot more volatility. And so if you are going to be doing a trade, it's best to just think about it in the short-term mindset. And then if you buy right now, you're going to be out of the trade within a couple hours. If you do want to hold beyond that, just be prepared for you to be like up 100%, then down 50%. You know, that volatility is going to kind of freak you out a little bit. So just get ready for that type of stuff to happen. In about an hour, the rate decision. Yeah, it's going to come in about an hour and 5 minutes right now, guys. I have CNBC on standby. When it comes out, I'll be here. I even got Bloomberg. Oh, you guys can't see it. I got Bloomberg behind me over here as well. So I got everything. I'm listening to everything kind of like in the back of my, I'm listening through my ears basically, but behind my head, basically, I'm listening to Bloomberg here as well. And, you know, right now, Bitcoin's trying to bounce. I mean, everything's trying to bounce, but you can see us trying. What I like about Bitcoin right now primarily is the fact that, like we talked about at the beginning of the stream, we're trying to bounce off of that 50-day moving average. These moving averages cause a lot of volatility. A lot of volatility, especially when you get pretty close to them. So right now, we're either going to have a big breakout or a big breakdown. There's no like middle ground here where we just kind of go sideways and stuff. I think that's what I want you guys to really understand right now. So if you guys are trading, you're pretty much taking a little bit more of a gamble than normal because this news is going to be so impactful to what happens with the market. I'm hoping the market finishes the day strong here. I would love to see us get up towards $62,000, $63,000. $65,000 is going to be rough, but again, we could break through 65,000 by the end of the week here since it's only Wednesday, but I don't think we're going to get there by the end of the day, of course. What we're trying to do here is, in the scheme of things, let's go to the daily chart. Remember, I know we've talked about this a few times here, but we see Bitcoin in this downtrend. You see how generally we have these lower highs. So we got a high zone, lower high zone, lower high, lower high, lower high. We're just trying to break out of that. When we break out of those moves, that gives us a better chance of breaking out above this larger resistance level, and that takes us up towards $100,000 basically for Bitcoin. Of course, it'll be like 80,000, 90,000, whatever, but it takes us up towards that $100,000 mark. And every time we get too close, you know, we typically get smashed down, smashed down, smashed down after that, smashed down off of that, smashed down after that. You know, got too close that time as well to that one, smashed down. Okay, we're trying to not have that happen here. What I think I'm pretty happy about though is you can almost forecast what happens based off of the move we have over this week. Because if we start to pop back up here, we get back up to 64, 65,000. Even if we don't break out above that $65,000 level, what that does is it kind of brings the momentum from coming down and it starts to bring it back up a little bit. Right now, I would actually say we're like this and we're like plateauing and we're just now starting to creep back up. Now that's what we talk about when we're looking at the MACD, right? Let's close this very fast, close this very fast. And go over here to the weekly MACD. See how this is still pretty bearish? Once this gets bullish, oh yeah, I mean, look at that. We're good to go. Usually we're pretty good when we have these larger moves, but they usually are tied to some type of breakout. So once we see this and we're in a bullish move here, like this or this right there or this, typically when we have a long buy signal, that's when you get really excited. So like just back over here, go back over here a little bit more. We were still kind of a monthly rut. We still have the monthly chart still looking good. So monthly chart good, weekly chart good, like back over here basically. This is where you get that breakout. That's where you get that momentum. And if I go back over here to this Bitcoin chart here, let me just zoom out on the monthly chart. You'll see those Fibonacci levels that we talk about all the time, right? Resistance, resistance, resistance. Next stop up here is $104,130.67. That's that next big level. Now it may take a few months to get there, but it'll be fun for those few months going up $1,000, $1,000, 10,000 bucks, 15,000. It'll just be a nice time on our way up to 100,000. After that, we're probably going to see a lot of resistance again. I don't think it'll be as long because it should be in the height of a bull market here. So I think people are really thinking that we're just going to go straight up like that. We'll see. We got Wall Street money coming in right now, so it's a little bit different. But still, we're just looking to get that momentum back on our side, break above 72,359, and then from there, we'll kind of charge our way up to $104,000. There you go. And Bitcoin's still booming here a little bit. Yeah, we're up 3% or 35 bucks. So that's a good little trade right there. If you're looking to scalp this, I'd probably sell around like 60,002 60,200, 60,100 for a scalp. SPX 6900 has been popping off lately. Oh, I haven't even heard of that one. No, I think I have heard of it. It's meme coin, I think. Would you recommend that we sell some of our assets if we are up and we get back in after the meeting? Right now, it depends on what your goal is. Like right now I have open longs that are swing trades at this point in time, and I haven't been doing swing trades in a while. I'm leaving those open even though we're going to be looking at some extra volatility. However, if you have some day trades that you're really concerned about, it's okay to sell those and try to buy back in after the announcement is made. Or what I see people more likely do is they typically just scale out of some of the positions, so they close the position by half basically, and that way the volatility isn't too much of a concern for them, especially if you have a profit and you want to lock in those profits, right? I'm not the best at giving, like, oh, you need to do this, you need to do this. I'm better at managing my risk and saying, hey, at this point in time, it's better for day traders to be in the market and not so much swing traders, unless they can handle the volatility of what's about to happen here. If you have like a spot trade, like a long-term investment, or it's no leverage or something like that, no fees or anything like that, I wouldn't touch that at all, because I'm much more of a long-term holder at this point. I'm dollar cost averaging. I'm watching those profits go up. That's kind of my thing to do, and I feel like that's the best way to do it right now. You tried 100x on paper account, feels like hell. It can be very, very volatile. Like, let me see, is there anything really popping off here? Let me see. Ethereum. Okay, so like Ethereum thinks that it wants to make a little bit of a move here. We'll see if it does. We can do a little bit of a fun trade here. So Ethereum, 200% leverage. We're going to be doing, let's do 75. What's the right amount here? There you go. We'll do an $80 long here with 200x leverage, and we'll just kind of watch it. Oh, did it not go through? Damn, it didn't go through. $100 long leverage here. There we go, we got it open. And then basically you can see it here, 200x long. It's not really doing anything right now, but we're up $1. That trade cost me like $10.79 in fees though, so it's going to be a little bit different here. But we could leave this open for a little bit. And you see, it's not doing anything. Ethereum's just kind of going sideways here, but it looks like it could have a nice little pop and reversal here. Actually, Ethereum doesn't look as looks a little bit nice on the hourly chart, while Bitcoin maybe looks a little bit better on the daily chart and such. And so what I'll do is I'll probably have a stop loss right down here around 22.85, just to be safe in case I stop talking about this. 22.85. So we'd lose about 180% because it's 200x leverage. So, and then we go over here to one. Well, that's fine. Confirm. Ooh, let's actually make this a little bit lower. $22.50. Yeah, $22.50. And that's only because of some volatility that could happen over the next few hours. $22.50. This will make it a little bit better. Yeah, I'll lose 484%. Well, yeah, we can keep track of that right there. There we go. So a little bit of stop loss right there. This isn't going to hurt me too much here because I've had a really good week, but it's always kind of fun to watch some volatility happening here. And, taxes make it a little bit easier to take losses these days. Last time I went 100x, I got liquidated in 20 seconds. If you do 100x leverage, you really have to make sure that you don't have an isolated position. You have to be able to go into the cross here. That cross is going to make your life just a lot easier. But you also have to have enough money in your account to really handle that. Because again, if it goes down just a little bit, you could be down 200%. If it's isolated, it just goes like that. Yeah, like in 20 seconds. Yeah, no worries, Christian. Lower highs and lower lows since April. Yep. Definitely there. It's been kind of boring, actually, in the markets. Fetch has held so well since its breakout. AI is still doing good, and we still kind of have these AI headlines coming out every now and again as well. You remember we just talked about Microsoft, and I think it was Tim, Microsoft, and I don't remember who. Somebody, they're Intel. They're having a big deal here. I think Apple, and no, I don't remember. There's a big deal happening in the AI world right now, so people are talking about that quite a bit, and that gives some good headlines to fetch. Let me see if I can go over here and find fetch. Look at that weekly chart with fetch. We have a head and shoulders playing out right now, and hopefully it has the momentum to break out. We don't have a bullish MACD just yet, but the stochastic is bullish, the RSI is bullish, and what we have going on here. Oh, sorry, let me make sure this is opened up. Let's see. There we go. Let me double check something. Oop, oop. And move that. There we go. Okay. Countdown to the Fed. And I'm going to hide this back over here for a second. But you see the MACD about to cross over. You see the head and shoulder, or the inverse head and shoulders, plus the opportunity for a breakout. I have some really high hopes for Fetch AI. I'm really hoping we can make a move here. Maybe I should do along with you guys on this one, a swing trade. We haven't done a lot of swing trades in a while. I think I'd feel much more confident about this swing trade though, you know, once we kind of hear this Fed announcement, because when I'm looking at this stuff here, let me get rid of all these little squiggly lines and stuff. See the inverse head and shoulders here. This breakout, all right, I'm okay buying right here if I know the head and shoulders is played out. I'm okay with it. That's my preferred play. But if you want to buy right there, it could always just end up coming back down and turning into a rectangle or something for the, you know, later on. So I'm trying to play it a little bit safer right now. I have some swing trades open, not too many. The swing trades that I have open so far, they've only been for a day, so they're pretty much down here. But the inverse head and shoulders, it looks juicy at the moment, and I'm hoping we can take advantage of that and let it run. There we go. What trading platform are you using right now, and what is the funding rate? Right now I'm using quite a few. You can check them out down below. All the funding rates on the funding pages. I like JumpX and Weeks. If you're looking to save money, I would recommend, I guess, signing up underneath my JumpX link. I have worked out a private deal with them where if you guys get 10% of all of your fees back daily through rebates. So let's say you do a bunch of trading, and this is just a hypothetical. You do a bunch of trading and you incur about $500 in fees for the day. All right, a lot of trading. So basically, around midnight Eastern time, you'd get $50 put into your spot account. And then you could put that into your futures account to keep on trading with it. You can buy some random token in their spot trades right there, right? But basically you get 10% back with all of your fees forever. But that's only if you sign up in the next like month, basically, because then I cancel the deal because it's usually for my people that show up here every day. But yeah, if you sign up, you basically just get 10% trading fees off for life, which is fantastic if you ask me. And it makes your trading experience just a little bit nicer because you're not paying as many fees. And then you also get the auto, you know, VIP 3 level, which just means you're not paying as many fees as the VIP 1 or the VIP 2. Basically means that you've been trading for a while, and you know they give you those little perks. I just have them built into my affiliate link, so when you guys sign up, you guys get a bunch of discounts, more than anybody else gives you, which is always nice. That means a little bit less money out of my pocket, but I don't know. I feel like people, like when I first learned to trade on leverage and I was doing a lot of it, I was burning through a lot of fees because I was doing a lot of high leverage trading like an idiot. I'm hoping that you guys just have a little bit extra capital to really start investing in stuff, and then maybe that makes you stick around on the exchange a little bit longer. That that type of stuff. I have a long at 70 cents. Oh, there you go. Yeah, you're still doing very well right now. Funding rate is most important to me. JumpX has a good funding rate. I mean, go check it out. I don't have the JumpX funding rate on me right now. Funding rate is 0.0072%, and I guess it depends on what you're looking at here as far as the funding intervals. That's what I don't look at, the funding intervals, but it looks like it's about every 8 hours or every 12 hours, depending on the asset that you're looking at right there. But everyone's going to have a little bit different because they have all these different, they always have different levels, right? This is, if you go to JumpX, you'll see it right here. I'm VIP 3 level 3. This is what all of you guys are going to have. You get the withdrawal fee discount of 30%. The taker fee is 0.034%, and the maker fee is 0.017%. Right? And then on top of this, you get 10% of all of your fees back to paid to daily, which is kind of nice. But again, I just like getting some of those fees back from you. And right now, Bitcoin's coming back down a little bit more. Why is this so... I keep on clicking on stuff, and I keep on making these nasty little yellow lines. There we go. And actually, what we can do very fast is let's listen to it on CNBC. They're talking about 25 to 50 basis point cut, and I think that's going to be important for us. And you give Loki a treat very fast. Here you go, Loki. There you go. Yeah, sure, there you go. Yep. Good. All right. Let me put my headphones on. I'm going to take off the music very fast, and then I'm going to actually... turn down the mic monitor. There we go. There we go. Turn up the audio to about 90% for you guys. And then let's put on CNBC for a little bit.
Market issues and away from, they haven't declared victory over inflation, but moving away maybe from the laser focus on inflation.
They better move off of inflation, Jesus.
But, you know, our base case is that the Fed cuts rates by 25 basis points today. But I'm very sympathetic to the points that Claudia made earlier. And if the Fed wants to follow the path of least resistance, it's going to be a 50 basis point rate cut because the market is very nearly fully priced for that kind of scenario. And there's a risk that if they don't deliver on that 50 basis point rate cut, that the easing of financial conditions we've seen with interest rates coming to the lows of the year, equities are near the highs, credit spreads extraordinarily tight, you could see a little bit of that unraveling in the market if the Fed doesn't deliver that 50 basis point rate cut. So that's what we're watching. I would say that the traders are much more inclined to believe that it makes sense for the Fed to front load some of these rate cuts, as opposed to being a little bit more methodical, given the fact that there are long and variable lags in policy. So
yeah, there is some lags in policy. Who would have thought?
To get ahead. The other thing is that they're going to have to somehow reconcile the spread between the rate cut that they delivered today and what's been priced in the market, not just for this year, but over the next year, where there's nearly 250 basis points of rate cuts priced in.
But by the end of today, we're going to know a lot more about how they're forecasting these rates as well. Maybe they start to feel a little bit more panic at coming in, like, hey, we need to start cutting rates a little bit more. Let me hide this back over here. There we go. There you go. So yeah, you can see that the market is pricing in some different things. People are getting a little bit more excited about that. But if I didn't think about that. If the market's pricing in a 50 basis point cut and we don't get it, will that mean that the market comes down for a little bit instead of just launching back up? But have we already done the launch? That's going to be a little bit more interesting to watch here. And hey, Juan, wow, it's really good. I'm using BingX now, and their funding fee is like 0.01. Oh, no, 0.01 is absolutely insane right there, yeah. Are U.S. customers allowed to jump X? Yes, they are. Yeah, use my link down below. You get all the benefits for it, man. I appreciate it. FOMC will be interesting, very much so. If it comes out to 25, I think Bitcoin will go down 3 to 5%. Agree. I'm hoping that's not the case, because if they do 25, I mean, maybe I should have a Bitcoin short open up just in case here. Let me see. Should I do a hedge? No, because, okay, what I want to do is, I know I just did Ethereum long. I'd rather have an Ethereum short working out for us right now. And let me see. This would be, no, I don't want to do Ethereum. There we go. We can have an hedge Ethereum short here. And if, there we go. That working out? Yeah. We'll have a hedge Ethereum short, and I think that'd be fine for us at this point in time. Open orders. Oh, those are just stop losses here. And we'll keep track of that. So that'll be a little bit of a hedge. And the only reason I'm doing it on Ethereum instead of Bitcoin is, again, because I really am salivating over this right now. Now, let's stay out of this Fibonacci level for a second. You can already see we're testing it. Actually, no, we can leave it on here. You can see we're testing support right here. There was some rejection right here as far as resistance. If we break down from here, Ethereum goes from 2294 down here to 2116. Then after that, it might come all the way back down here to 1746. And that might be as low as it goes for a very long time. But that'd be the really bad scenario. For me, I'm thinking more of just the move from here to here. It could possibly keep on coming back down. That's true. The weekly chart is still very bearish for Ethereum. But I think I'd just open up a new trade afterwards because I would assume we have to bounce up a little bit more. You could almost see with Ethereum here, actually. It has its own little trend line here. All right, so I'm just looking to trade that little move right there. And again, that's a hedge that we're doing just in case we do have that. Because you can already see Bitcoin still hasn't broken out. Bitcoin is still dealing with its own level of resistance. We got rejected over here, and we're going to try to see if we can break out today or tomorrow. But this violent move that's coming, it's going to be violent, right? It's going to be very, very, very violent here. Let me move this back up here a little bit more. Actually, let me listen back in on here for CNBC. Hold on. Oh, this would be a good one here. Hard landing confirmed. We'll come back to them in a little bit. Oh, man. I have been hearing more about that rule here, but what's so interesting, like you just said, the rule itself says we're in the beginning stage of a recession. But the guy that created the rule says, no, we're not. And because of all the crazy stuff that we've seen since COVID, it's kind of fucked up the technicals for the actual rule itself, which I just find to be absolutely hilarious. But do you guys think we're going to have a hard landing or a cold or a soft landing? Sorry, thinking of ice cream here. Soft landing or a hard landing? Oh, if you guys can, please make sure to like, subscribe, and chat. Every time you guys comment, it helps with the stream a lot. I'm pretty sure that what YouTube is looking for when it comes to channel growth. I don't even think it's subscribers. I don't even think it's likes, to be honest. I think it has everything to do with how many times you guys comment. So every comment, you guys, I really do appreciate it. And let me make sure I'm actually going back over here. We don't need CNBC open anymore. Is there any more news that's actually breaking on Twitter right now? Because we heard about the bomb threat from Donald Trump here. Sham Sports. WOJ bomb. The heck is this? Oh, I see. Okay. Oh, okay. He's retiring. Okay, that's what's going on. Hezbollah. I don't think there's been any more breaking news from this lately. Just still seeing the explosions and stuff like that. Yeah, just explosions. Oh, that sucks. Let's see. No, nothing really crazy happening right here. Lebanon still trending. I'm still waiting for the Middle East to set something off here, guys. I'm still waiting on that Middle East to set something off. Let's go over here to the SPY. You're seeing everything kind of bounced around right now. All they're doing is just waiting. They're kind of in this weird hiatus moment. Everybody's just like, the quiet before the storm here. And we're going to see how crazy this storm ends up getting. Hamigo, do I enter into... Wait, what did you say? That thing always pops up. How do I enter a short on Dogecoin? If you don't know how to enter into a short, you be careful if you're going to be trading right now. It's just going to be very, very volatile for you. Typically, all you have to do is go to an exchange... And then you're going to go over here. You're going to see, the price that you want to buy. You're going to go over here, set the amount of money you want to invest in it, like that. Whether it's, 1 Ethereum, 2 Ethereum, or $500. what is this? This is let me just go over here. It's like a 1x leverage. Pending position. Oh, it's already open. Yeah, but then you just hit open or you hit short over here. So if you are going to open a position, it's pretty straightforward. But if you've never done it before, be careful. Be very, very careful. It could really hurt you bad if you're not too careful there. Let's put this right back over here very fast. And hey, Paul, I appreciate it, guys. Let me see right here. Bitcoin still doing fine. We can exit out of that one very fast. Still got those trades. Put that up here. Let me see if anything's actually popping up right now. And then what I need to actually do is go back over here. And I need to put back on that music because it's actually soothing to my soul here. There we go. And push this back over there. Still got the audio working, I think, which is going to be good here. Yeah, I mean, last hour we haven't really seen anything move. Everything's like getting ready to pop here or drop like a rock. Let's go over here to page 2 on coinmarketcap.com. There we go. There we go. Oh, make sure that's not too loud for us here. There we go. That shouldn't be too loud. I know the audio can kind of be a little bit different. And what do we got? We got 40 minutes left until we get the decision here. No, nothing is moving right now, guys. Nothing is moving. This is pretty interesting. Is anything moving on the downside? Nothing is moving. Last 1 hour. You got to get down to the $119 million market cap to see anything that's moving at all. I mean, that's really what's happening now. Everybody is like just waiting. Yeah, I mean, if you get to the 97 million market cap, you got something going up around. Oh no, it changed to 2%. Oh my gosh. Here, hold on. Let me go over here to Sun Pump. Oh, Crypto Zillion Club has made a big pop over here. Let me actually pull this up. These are the Tron meme coins. Tron Bull came crashing down, which means an insider probably sold off a large chunk of it. Sun Wukong still falls down. Suncat's making a move up here. Invest Zone has come back up a little bit after having a really bad day too. Crypto Zillion Club. What is this? I just want to see the chart here, basically. Yeah, that's fine. That's fine. Countdown to his release from prison. Oh, it's probably going to build up until then, yeah. Let's see. Do they have... I just want to see the chart here, though. No, I don't see anything here. That's a shame. I'm not going to go to Telegram to look at it. I got too many Telegram accounts as is. Sundog is still fine. Yeah, I'm surprised there's so much volatility in these. Oh, I guess I'm not surprised. They're all low market cap tokens. 20-hour price increase. Community pets up to 3,000%. Holy shit. Gorilla. Nero's here. Whatever happened to that other Nero one? 24-hour trading volume. And TRX. Really? Sunduck. Market cap is at 2. Dude, there's a lot of money moving through Sunduck. I might have to buy into that one for, again, a YOLO here. Everything is YOLOs. Oh, there's a chart right down below it. Jesus, okay. The daily chart so far is actually looking pretty good. Let me go over here very fast. That Crypto Zillion Club, it's right here. Oh, geez, the 5-minute chart does not look pretty. There you go. 4-hour chart. Oh, it's been dying off a little bit more here, so And hey, Kumar, happy to see you. How late will the FOMC be? The FOMC is in about 10 minutes and 23 seconds. Here, let me do this for you guys very fast. Here, we can listen to. Here, let me do this for you guys very fast. Again. Let me push pause here. Let me put CNBC on. You guys can listen to it while I'm doing a little countdown timer for you very fast.
That's why the debt is as large as it is.
And it's
the old guns versus butter. And I know it tastes like fishbowl water when I tell my constituents, we can't do all of those things. The math just doesn't work. Something's going to have to give. And that's longer term what the fight's going to be over.
Do you think that apart from renewing some of the tax cuts that were in the 2017 legislation, freeing tips from taxation, freeing overtime from taxation, freeing Social Security benefits from taxation, is that plausible?
Here's what I think. I think the biggest economic problem facing the American people is inflation. It's gutting the middle class and lower income people like a fish. We're not going to be able to reduce prices. I know we've reduced inflation, but we're not going to be able to reduce the actual prices without doing one or two things: going into a recession, which nobody wants, or number two, growing our way out of it. We've got to do something to stimulate this economy. It's very, very weak. And about 5,000 years of history demonstrates to us that if you want to increase income, if you want to increase wealth, you've got to increase output. You're not going to increase output by raising taxes. If you tax something, you get less of it.
The issue just being, of course, as people would say, that output has remained fairly consistent throughout all various levels and degrees of tax cutting cycles. And the issue is that Trump's policies in part helped to grow the debt pile we're now servicing. And the deficit is so wide at 7% of GDP right now, there's going to be pressure to close it. So I don't know, even if you wanted to incentivize a faster growing economy, what other options do you have?
I just don't agree with you. I respect your opinion, but I don't agree with you. When we cut those taxes in 2017, if you look at the numbers in 2019,
there you go. There's a nice little countdown timer for you guys.
It clearly stimulated the economy. Wages went up, especially at the lower end of the wage scale. Companies repatriated trillions of dollars from overseas.
They did, but the Fed still cut rates in 2019.
But then we had a pandemic.
Yeah.
And all bets were off in terms of judging. What I would like to see us do on the tax cuts is go through every single one and say which one of the tax cuts worked, which ones didn't work, and let's do the ones that worked and throw out the ones that didn't work. Now,
all right, there you go there. All right, so I got a little bit of a countdown timer on the screen for you guys right now. Basically, there we go. Basically got 33 minutes left. I'll have CNBC right here for us to talk about. We don't need to listen to Kennedy all the time here. So that's kind of what's going on. A lot of volatility, of course. We have everything kind of set to where we want it to be. Just checking out some meme coins here. I can get out of my channel. The market's not moving at all, though. I mean, even the stock market right now. Let me show you guys this version right here. I'm looking at Apple's up 2%. That's about the highest I see. I mean, Visa's down 0.5%. Everything's 0.5% up a little bit. You know, yeah. Only thing I really see moving. Intel's down 2%, but they had a really good week so far with the news that it had. Really, Apple seems to be the only thing moving right now. That opened up since market. Maybe there's some good news there. Apple news. I was just talking with a friend. I want to buy one of those Huawei phones. For when I move over to Thailand, I really want to buy one of those. One day ago, 5 hours ago. Let me just say Apple News, CNBC. Apple slides. Oh, this is it. Apple's in talks with JP Morgan for bank to take over card from Goldman Sachs. I heard the Apple Card has been an absolute disaster for Apple. I don't know exactly what's been going on. It must be the fees are too high and people are pretty good at paying back their debt, so there's no fees, there's no real interest occurring on them. And so they haven't been making a lot of money because they have such hard... I guess you have to have a pretty good credit to get an Apple Card. I'd rather have an Amex personally, but basically, if you pay your bills on time and you don't incur interest, Apple's not making any money off of you besides, you know, a little bit of a swiping fee that they get from the retailer on the other end of it. So they're looking for a way to make a little bit more money or at least save on cost here. I guess at least save on cost. Go over here to the 5-minute Bitcoin chart. We kind of ride this wave here. And hey, if you're like time for some tea, trust me, I know I've been sipping here and sipping. But we still got plenty of time here. I mean, what is it? 30 minutes and 46 seconds. It's coming. It's coming here. Hell on the way? Hope not. Oh, man. And no worries, Muji, but happy to see my man. Do you trade if you see the Bitcoin react to sell on the rumor or will pump? So typically, I don't like trading during these volatile times. I don't like trading. I'm trading basically because I'm live streaming with you guys, and I just want to have some skin in the game, basically. That's basically what's going on here. I have a swing trade Ethereum short. I have a day trade Ethereum long. There's like a bunch of stuff. I got a Bitcoin day trade long. I got an Arbitrum day trade long, and I got an Ape token day trade long. So right now, oh no, sorry, Ape and Arbitrum are swing trades long, excuse me, not day trades. So I got a little bit of a mixed bag right now as far as, you know, what I'm expecting to happen, or how I have my trades up, but not really how I'm expecting it to happen. So that's kind of where I'm at right now. Most of my positions are long on the day trading. I got Bitcoin long, Ethereum long, but I also have a little bit of an Ethereum hedge in case we decide to start bombing back down. But that Ethereum hedge is kind of more of a swing trade there, so it's a little bit different. I'm hoping that we can have a nice little pop. But again, I am hoping for a 50 basis point cut personally. Right now, if you guys haven't done it already, make sure to vote in the poll up above. How much is the Fed going to cut rates? We have 25 basis points, 50 basis points, or no cut. 46% of you guys, the majority, are saying a 25 basis point hike, cut. 40% say 50 basis point cut, and then 13% say no cut. So the majority of you guys, by about 6 points, are saying we're only going to be going cut. We're only going to be cut by 25 basis points, which is fine. I mean, if you look at, you know, what we just looked at as far as CNBC and stuff, it's definitely, you know, they're kind of trending towards 25. You've just heard all those people on the panel saying we're going to have a soft landing. We're going to have a soft landing. We're going to have a soft landing. And right now, you know what I see right here? I see Gary Gensler's talking, actually. See, there's Gary. I'm not going to play his sound because his voice annoys me. But apparently they passed some new rules. So there's some different changes to how trades are going to be working out. Now, this is nothing related to crypto or even really the stock market all too much as far as like how we would use it. But apparently they're going to tighten the spread so we make a little bit more money. And the middlemen aren't going to be making as much money going forward, which will be kind of interesting to see how they react to that. Because usually when they lose out on money, they put fees in somewhere else, and because they still want to turn that profit, of course. So if there's any big news from him, I'll let you guys know. Right now, I see Bloomberg behind me, and there's nothing really happening on Bloomberg. They just have that like nice quiet sound. Can I check Anchor? It's about to pump. ANKR. So far it's been going down here over the last couple hours. Maybe the 4-hour chart. Still coming down a little bit more. Daily chart. It's kind of had a breakout so far. Hasn't really been the best one, but it's been trying to hold a little bit, maybe. This could try to break out something more on the next few weeks here, where you can have a curve back up. For that, though, what I'd be looking at is more of a Fibonacci extension here. That's what I'd be doing. You pull this out a little bit more, go high, go low. Some resistance. I'd be aiming up here for 0.03 if you're going to try to make that move. Right now, though, short term, it's basically getting rejected. So maybe once that breakout occurs and you have the daily momentum still with you, which it is right now, that could be a good case to make a move up here towards 0.028 all the way up here to 0.03. So that'd be the selling zone right here for me if I'm going to make this trade. Let me get the magnet. This would be my price target zone, basically. Anywhere in here, I'd be very happy to sell. Anywhere in there, I'm happy to sell and take a profit. Right now, though, it just has not been able to break out. You can see it tried right here with the wick, and it just kind of got knocked back down, unfortunately, there. But give it some time, and if Bitcoin does break out, I mean, so will that, basically, right? But right now, again, everything, including Bitcoin, is just doesn't know what it wants to do. It has no idea what it wants to do. It's just going back and forth, back and forth. You saw a pretty heavy rejection right there off of the 50. and then all of a sudden, boom, it's coming right back up. I think everybody's just waiting patiently for that nice, beautiful movement, because in 25 minutes and 43 seconds, it's going to be a big day. SEC, yeah, they're still talking about some boring stuff. Went for tea and got coffee. That usually will happen. I mean, hey, I got my Earl Grey right here with that Amish honey. I feel so bougie having Amish honey in my house, especially because I'm on the whole other side of the country than the Amish. But it's pretty darn good. It's a little bit different than a regular honey, actually. And hey, Anton, I appreciate my man. Can you explain cuts? Or explain cuts? So basically, you have to kind of talk about why we hike in the first place, then why we cut. So we hike rates in the first place because we want to slow down the economy. We want to make it more expensive to basically borrow money. And in the simplest of ways, we want it to be more expensive to borrow money. That way you're not going to be spending as much money. And if you're not spending as much money, the economy cools off a little bit, right? And then, you know, you raise them up to a pretty decent rate, and it kind of keeps the market from getting too out of hand. It's usually overheated is what they usually say. Now, when we're talking about cutting, we want to get the economy moving a little bit more. We want more money being exchanged. We're seeing a slowdown, because if we slow down too much, of course, we get a recession. So right now they're trying to cut rates because they want more people to be buying things. So that means that your credit cards will get a little bit cheaper to, you know, use your credit cards. If you want to buy a house, the amount for the loan, you know, the monthly fees for the loan, those will be cheaper. All that stuff becomes a little bit cheaper. Private loans become cheaper, all that type of stuff. And so that means you're more likely to go out there and buy a house, which means that person that does the commissions will get more money. The person that wants to sell their house will be happy to get rid of it, you know, and you can get in there. It spurs more economic growth. And that's all they really want right now, because right now we're seeing jobs go down a little bit. We're starting to see the economy teeter a little bit. Not towards a recession, but just definitely you're seeing a slowdown here. And we're trying to fix that up here. What moving averages do I use? I use the simple ones. I use 200, 50, and 20. That's my preference here. There are plenty of other ones you can use, and plenty of other ones. You don't even have to use simple moving averages. You can use exponential moving averages. There's double exponential moving averages, and then there's triple exponential moving averages. There's a whole host of, you know, ones you can use. It really depends on how you trade. For me, as somebody who prefers to do swing trading, I really prefer having simple moving averages. For those of you guys that really prefer day trading, maybe you want to do exponential. If you're really looking into scalping, maybe you prefer the DMAs or the TMAs, the double exponentials or the triple exponential moving averages. It's really like a personal thing. Most people don't even use double exponential moving averages or a triple exponential moving averages, and that's perfectly fine. But they can be very useful at times, especially if you're looking for very quick and rapid movements. But you kind of have to time them, and you have to really figure out the numbers that you want to use for those ones, because they can change up a lot. And again, Bitcoin's having some like nice moves, but it just keeps on getting slammed right here. Is something happening with the Nasdaq that's similar? No, Nasdaq had a beautiful move over the last few minutes as well. SPY's getting hit too. Dow's getting hit. Oh, everything's getting hit right now. Oh, what's going on here? Yeah, look at that. Bitcoin's actually not the worst of it. The Dow Jones getting hit, Nasdaq. Yeah, what's going on right here? I'm trying to see. I'm looking for breaking news behind me. No, there's no news happening on TV right now. Everything's just getting a little bit of a sell-off here. What's happening with the dollar index? The dollar index is coming back up a little bit, but not too much. The dollar index actually was coming down off a little head and shoulders play. Oil's pumping back up a little bit here. Was there some news that just happened? And thanks, Sandy, for subscribing to the channel. Yeah, that is a little bit more interesting here. Interesting. Well, Bitcoin's holding up fine, so that's all I care about right now. Yeah, we'll have to wait and see. The only thing that would make the market bullish is a 75 to 100 basis point cut. Historically, 25 to 50 make the market bearish 1 day to 180 days after cuts. It usually depends for me on what the market environment is. Right now, the economy is still fine. It's not great. It's not good. It's not even fantastic. You know what I mean? It's still okay. But typically, when you think about the weeks after we have a cut and a slowing economy that's not a recessionary one, typically we have a little bit of a bounce here. We'll have to see if we have that this time. or if we're going to go down the path of like the COVIDs, the financial crisis, or the dot-com bubble. I don't think we're at those levels just yet, but the volatility is definitely going to be coming along here. Do I think we're going to face a recession? Right now, a recession in 2025, I'd probably have one priced in right now, about 35% chance to 40% chance. That's kind of what I'm thinking of right now. We're having an election right now. We're kind of not thinking about the economy all too much, but I think people need to remember the government pretty much said that we had 800,000 more jobs this year than we did, and they had to come back and say, oops a daisy, we actually didn't have 800,000 jobs added to the economy. They had to take out 800,000. Here, let me see. I think this is it right here. No. Jobs report, August. Which link did we use last time? Oh, JP Morgan. There you go. Oh, there you don't go. There we go. Zoom in. There we are. Okay. So, where were the jobs this last month, right? We're still growing jobs, right? Leisure and hospitality. In a recession, these go straight down because nobody's traveling, obviously. Healthcare, still hiring, need more nurses. A lot of them left during COVID. They became travel nurses and stuff like that, or they just got burnt out. Construction, we basically passed a huge infrastructure bill. We got to have people to build shit. Fed, state, and local government. Government jobs are always nice to have. It kind of just props up the whole numbers. Financial activity is up a little bit, professional and business, then some other stuff here. Information services is going down. Retail trade is going down. And manufacturing is coming down a lot. Like 20,000 jobs. That's a lot. That's a lot of jobs to lose in manufacturing. So manufacturing is definitely seeing a problem right now, and to me that's a big warning sign. That's where the majority of my bearish thesis comes. When I'm talking about that 35 to 40% chance of a hard landing, that's basically what's happening. Dump to pump. Here, let me show you what happened last time, guys. We had those cuts, so I can show you guys what happened to the SPY. Then I'll show you guys what happened to Bitcoin. The last time we had cuts when the economy was doing fine and we didn't have a full-blown pandemic was back over here. Let me double check my numbers just so I can recall. I'm gonna go here, open my ChatGPT account. Rate cuts. So it was July 31st, 2019. Now, we're in a totally different environment. We all understand this, yada, yada, yada. Basically right here, right? Market came down for about 1 week of coming down, then we kind of popped back up. The second rate cut during the cycle was September 18th. Basically right there, came down a little bit more. And then afterwards we had October 30th, which was basically right there, okay? Those were the 3 rate cuts the last time we did not have a crisis. No crisis. Economic slowdown, no COVID, no 2008 financial crisis, no dot-com bubble. All right. Now, here's the weird thing. These cuts were 0.25% cuts. So if we have a 50 today, this could be different, but this is basically what happened. You saw the market move down a little bit, but overall, we went up. And I mean, of course, COVID was right there. So that changes up some stuff, but you can see market right there. So movement up in that direction. Now this is a weekly chart. So after the first cut, you can see right there, before COVID happened, the market rallied up another 17% over the next 204 days. That's the SPY. Now with Bitcoin, you can see it's a little bit different here. So again, we're back over here. Let me put this back up here. July 31st. Right there. Bitcoin popped the first time. Back over here to September 18th. Market dropped that time. Again, 25 basis point cuts. And over here, October 30th. Right here, the market kind of just went kind of flat for a couple weeks, then it had a drop over here. And it kind of fit that same model where we kind of are now, where we're kind of flagging right now. And of course, afterwards, we had a breakout, right? Started in the next year, 2025 for us, if this is the same type of pattern. And then we had COVID. So again, we don't really know what would have happened after that because that took the market a few weeks to get back on its feet. But perhaps we would have, canceled out this to this and we might have just kept on rallying up, basically. But again, COVID can really fuck things up, as we all kind of imagine here. But that's what basically happened last time we had rate cuts, when there wasn't a crazy type of market environment. Like we didn't, again, COVID was crazy. I mean, everything was crazy. Financial crisis was crazy. .com bubble was crazy. It was just going to be one of those days, right? Or one of those years, I guess. And hey, again, but happy to see my man. Hey, ICP, hello, hello, hello. We're going to dump and then we're going to pump that Bitcoin, baby. Let's go. We're breaking out the VWAP right now. Actually, looks really nice right now. I mean, I'm looking at us at this point in time, looking at that 15. We're trying to make a solid move to the upside here. Our Ethereum long is up 10% right now, which is, I guess, happy, But again, we have like a 200x long, so I'm hoping it does a big move. If Ethereum pumps though during this time frame, or during this announcement, we're just gonna sell it within like the first 10-15 minutes. That we are not gonna be holding this past the beginning of Jerome Powell's speech, because that it'll just come back down after that. And let me put this back over here very fast. 13 minutes and 50 seconds basically left. I just gotta make sure I have the right thing going on here. Oh, actually, hold on a second here. Where is this? There's Elizabeth Warren talking. I want to listen to her very fast. And let me just turn off the music again. Turn this up.
In industries where there's more concentration, there's been a
There we go.
lot more increase in profit margins. In other words, where you have dominant pricing power. You may have noticed just last week in the hearing over the grocery store merger, the CEO of Kroger takes the stand and says, yeah, we passed along the cost because of inflation, but we went ahead and larded on a lot more price increase on top of that because it was a way for us to make profits.
That with Albertsons, that their prices would be lowered by 10% immediately.
Sure.
I believe that. I've seen that happen in my own life. When
sure.
Super Walmart came into my town growing up, it was the cheapest, best option that had ever happened because it was more competitive, it was more efficient, it was better run, and his argument is that if you let the marketplace take care of that, in the long run, you'll deliver better prices for consumers. To Tyler's point, prices had been falling for many consumers in real terms for years going into the pandemic because of that competition. And my concern is the prescription to fix that problem during the pandemic is going to stifle that and keep the next generations of people who need lower prices from being able to access them.
So let's start with your example.
Oh man, this is a debate going on right now.
And you're right. I believe in markets where there's competition. That's not what Kroger's and Albertson are trying to do. What they're trying to do is they're saying, let's get rid of competition. Let's take the two giants and marry them to each other and share all our price data. And you know what happens in those circumstances? Prices go up and employees also take it in the neck. So
take it in the neck. Damn, she is being dramatic.
One way we do that
she has a point,
is we get Lena Khan and we got the Department of Justice to enforce our antitrust laws.
I think people just go out and open up
I don't know.
Roadside market. There's plenty of. Listen, poor Greg Ip is not going to have any time to speak before the Fed if we don't end this right here and now. Is there any final thought from the senator?
No, from the senator. I'm good. Thank you so much for being with us, Senator Warren.
Always
a pleasure to have you here.
Good, and let's go for competitive markets.
I wanted to talk bank M&A as well. Let the banks merge. I'm like, let it all happen.
You mean let one giant? I tell you what, you want industries where there is exactly one giant at the top, and you think prices are going to come down? Not
I'll
going
leave
to
it there.
happen.
Senator Elizabeth Warren of Massachusetts, thank you very much. Appreciate it.
Yeah. And as I mentioned, coming up, longtime Fed watcher Greg Ip also wants the Fed to start big. He's advocating for a half-point cut. He'll give us his final thoughts and what it means for your money next.
All right, half-point cut. There we go. So I'll put that again back and hide it for a little bit. Elizabeth Warren, always fireworks every time her and the CNBC guys go at it. So I just wanted to show that very fast. I don't know if you guys agree with her or not. But regardless, we got about 10 minutes left until we have this Fed rate cut decision. It's going to be a great, so stick around here, guys. Let me see right here. I hear dumb people. Oh, guys. Regardless, I like listening to anybody that shows up on CNBC that's a politician because I just love to hear the rationale for their thoughts and stuff and how they want things to kind of go. And whether you agree or disagree with Elizabeth Warren, you kind of saw what her points were, what she thinks about stuff, and then you could make your own decisions based off of that, of course. But yeah, that was interesting. The CNBC host was like, but CNBC host has to do a better job of pointing out facts and shit. Elizabeth Warren was giving examples and stuff like that. The other woman needed to give a little bit more. But again, I didn't hear the full interview. I just saw it on the side of my face. All right, hold on a second here, guys. We're going to give Loki up. No. Up. Oh, you can see the shoe he stole. Good boy. Good boy. Come up. Yep. Yeah, so. My shoe. Funny thing is, I gave this shoe to Loki, but I never got a chance to wear it. I never got a chance to wear this shoe. And I liked it. I don't normally have flashy color shoes where it's like orange and shit on the bottom. But you know what? He took it. And it's still in pretty good shape. Still pretty good shape. All right, there you go. Yeah. Bitcoin is popping off finally here. There we go. Aren't the minutes all right already? No, that's the big old countdown timer right down there. That's the big old countdown timer. What if we encourage competition by removing any competition? That's the way to put it right there. Oh man. You are going to see a pretty aggressive FTC coming up, I would say, over the next few years, regardless. There's a lot of mergers on the books about to happen here because a lot of companies have taken on a lot of debt, basically, and they're in kind of a bit of trouble here. So they don't merge. There's a chance where they have to try to restructure the debt and all this other type of stuff. It makes it a little bit more of a challenging environment. Like right now, I mean, not every company can merge, that, but like right now, you took out Boeing. Boeing is a freaking dumpster fire right now, an absolute dumpster fire. I live, in Washington State over here. And there's about 30,000 plus people striking at this point in time, and they want like a 40% raise over like 3 years or something like that because they haven't had a contract negotiation. I think in about like 15 years, something like that. It's been a very long time, since like 2010 or something. So there's a lot of companies right now that could use some help in a merger right now. Oh man, Ethereum looking to boost? I hope so. It's been kind of bearish for a while now. I mean, what's it right now? I mean, finally, yeah, you're right there, up 74% right there. This is a 200x long here, so we're just trying to make some profit. At this point, with the profit loss, though, we're down $10 because of the fees, but we're up 73%. This could easily go back to being down a few percent, of course, but yeah, we're doing okay here. We're seeing this move up a little bit. We're probably up almost 0.5% now, especially if we hit up towards 100% plus. Nice little trade. If I close the position right now, I'd walk away with like $80 profit, 75 after fees. So that's not bad. There we go. Oh, I thought we were going to hit 100%. 100%? 100%? No. Maybe. I want to hit this and I want to listen to CNBC here again. But I think this is no, we're going back down a little bit more. 88, 89. See, this is why I can't do trading with you guys so much. I'm so mesmerized by numbers. Well, usually I open a trade and I just kind of forget about it. It's a lot more exciting when I'm here. So yeah, you see Ethereum also trying to make that move coming up here too. Bitcoin's breaking out. You're seeing tokens across the board come back up a little bit. FTM is having a big rocket ship moment right here. It's up 3% in the last few seconds. KDA is up 18%, still consolidating. Doing okay so far. But FTM seems to be the guy making the big move right here. And again, Bitcoin's still getting pushed back down a little bit here. 5 minutes left. Let's see. Oh, actually, hold on a second here. I wanted to listen to this very fast.
And there's a kind of bias towards incrementalism at the Fed as a big institution, right?
There is, but then look at 2022, all right? After the first quarter point, they started going a half, three quarters. Why were they moving in those big moves? Because they said, we are so far below where we ultimately need to be.
We're behind.
We're taking very few risks by moving rapidly and taking a lot of risks by dragging our feet. And I think the inverse is partially true today.
Greg, it's great to see you.
Thanks for having me.
giving us a little curtain raiser, Greg Ebb. We're less than 10 minutes from the decision, about 6.
All right, there we go. We're getting ready. Bitcoin's moving up a little bit here. We're getting pretty close to a snazzy moment. Where can I do leverage trading in the United States? I have 3 links down below in my description. All of them are going to be fantastic for leverage trading for U.S. citizens. U.S. has a little bit more regulations and stuff like that, of course, so there's not going to be as many options. But I have 3 down below. And the best one, I think, for most people to start off with, if you guys are trying to be like consistently profitable and you guys aren't trying to go gung-ho with all the meme tokens and stuff, there's JumpX down below. And JumpX has the best fees out of all of them because you guys get 10% of all of your fees back every day around like midnight Eastern time. So when you wake up in the morning, basically, you look at your portfolio, you look at your wallet, and you got 10% of all your trading fees put back into that spot account. Shiba's on the move too. Oh, look at this. Let's see. Yep, we're seeing a lot of stuff try to pop up right now. And hey, Wessel, you hit it already, Michael? I share. 101% when you looked away. Oh, I did? Ah, snap. Oh, well. Right now, I see Bitcoin's coming down a teeny bit, so I know Ethereum's coming down a little bit. We're not at 100%. We're probably at like 20% all of a sudden now. No, I told you. Now it's down to, oh, now it's back to 4. Oh, this is fun. Yeah, we'll give it some time, though. It's going to be very volatile. I got a stop loss on that sucker because it is such a risky trade. But yeah, it's always kind of fun. But we got 3 minutes and 37 seconds. When that timer hits that, I'll put up the CNBC again. There is a little bit of a lag, so you guys will probably see what's happening before it comes. That's just the way that kind of YouTube works, so there's going to be a little bit of a lag coming from my stream to yours. I believe YouTube has it about 10 to 15 seconds. I am also streaming in 4K Ultra HD, so if you guys want to look at the 4K stream, you can go over there and see me in 4K so you can see all the numbers and everything in a very high quality setting. But I think that does take about 10 to 15 seconds to kind of, encode and send it over to you guys through the World Wide Web. And thanks, Gambit. Right there you have the VIP code right there. And let me see. Let's see. Oh, I don't think the code came through all the way. Oh, you know why? I think it's because of what do you call? Oh no, what do you call? It's in the pinned comment up top. So if you go to the top of the description and you want to join JumpX, it's right there. Because you have to use the right code, or it'll have, or it won't give you the discount thing for it. And hey, Nair, I'm in a long. Yeah, I'm in a long right now. This is a very volatile time, so if I don't make money on it, I'm kind of accepted it. I'm okay with it. Right now, I'm long because I'm hoping to do a 50 basis point cut, and I think we might have a good shoot up because of that. 25 basis point cut, I think, makes it a little bit more unpredictable to be honest. Right now, I see that we're looking at 25 basis point cut. 47% of you guys say that. 41% say 50, and 13% say no cut. If you guys haven't already, make sure to vote. I really want to hear you guys' thoughts because this is very, very, very close right now. And let's see, how is the overall market doing right now? Let's go to the 15-minute chart since the market opened up. You can see, since the market opened up, basically the market opens up right here. Bitcoin's basically back on top. Now it's profitable for the trading day here as far as Wall Street's concerned. The SPY is basically breaking even right now, still a bit down actually. NASDAQ, not really much has been happening here. Dow Jones, not much has been happening here. But basically you can see everything is pretty much flat and waiting for a large move to occur on the bearish side or the bullish side here. Everything is. And the dollar index right now is still creeping around. It's been kind of flat here as well. A bit of a double bottom, broke out, came right back down. So being patient is going to be the key here. We prop this back open here. We got about a minute. We got a minute. So what I'm going to do actually here is I'm just going to put this on. We're just going to listen to CNBC and let it play out.
Start moving maybe a little bit more, but really it will be extremely important to get the game plan from Jay Powell today as to where
that press conference is going to be crucial today. Absolutely crucial.
Ongoing conversation about what's the next reg cut, how big is it, when is it, and we need some guidance so we're not always in this like guessing game right down to the wire.
David, make the case for a quarter point instead of a half point.
Well, I think the economy is fine, and I think the issue here is the messaging.
The economy is not fine. All right, actually, it is fine.
Look,
it's not good,
inflation's
though.
come down. It's coming down, but the economy itself is strong, so we can afford to be gradual here, bring it down 25 basis points. I think we might see three cuts this year still, so I think they can bring it down, every meeting by 25 basis points. But don't shock anybody by bringing it down 50. Don't give the sense that there's something wrong with the economy, because frankly, the economy is growing just fine.
Jim, do you agree with that? And how do they square an economy growing just fine with the concern about inflation we've heard both candidates mention and what they're hearing from constituents? How do they message
Should come out in a second. Oh,
well, look, I think one of the things that they're going to have to message.
there's a wall
is
happening
that
right here.
there's
There we
risk
go.
To going 50 basis points, and one of the risks.
Beautiful.
Is that
Beautiful.
they could
Beautiful.
unanchor inflation. We
20%.
We saw CPI
20%.
data
Come
out.
on.
The
Come on.
inflation
Come on. Come on.
data it's coming
20%,
down.
220%.
But, there is some sign that it might be slowing. We still think it's coming down. We don't
What
think
should I sell
inflation's
this
a big
at?
Problem. Look, the Fed has
2,
to take a bet here. They are
3,
taking
4,
risk. The risk is
23,
if they don't
40.
take a big bite right now and
How do I want to play this?
go 50 basis points, that it could be that the unemployment rate accelerates higher, and that creates a bigger problem down the road. But the other side of the risk is that if they do go too fast and inflation then starts to perk up a little bit too high,
Okay,
then
I got out of it for
they've
I don't know how
they
much that
basically
was,
signal
but a
to
few
the market
percent.
that they're very
There we go.
aggressive,
Oh,
and this
Bitcoin on the other
creates a
hand,
bigger
back to being a
problem down
breakout
the
here.
road. So, in my view,
We'll come back to you in a very short time, but we are just seconds now away from the Fed's
They cut by
decision.
50. They cut by 50. Yes, sirree. This is why I wanted fucking 50. There we go. Oh, did I sell my Ethereum too soon? Maybe I did. I don't care. I made money. Fuck it. I'm happy.
50 basis points to a new range of 4 3/4 to 5%.
Let's see this one right now. Up
Bowman preferring to cut by 25.
Up 364 bucks on this one. The Ethereum short is going badly though. But that's for hold for a while. So Bitcoin. Okay, let me close both these then.
Additional adjustments to policy based on the data.
So I gotta hold this for a little bit longer. The Bitcoin one is up 34, up 360 bucks.
Is expected or forecast.
So this one's going to be a wash as I close it.
For this year, for a total of 100 this year.
Yeah, this is going to be a wash on the JumpX one. But I made money overall. That's all I fucking care about.
Right now,
Sweet.
Another
Woo!
100 basis points of cuts expected through next year, bringing the rate down to 3.4%. All of that a bit above.
So
where the
Bitcoin's
market
popping.
is priced.
Dow
And the
Jones
new
is popping.
long-run rate would hit
Nasdaq is doing
2.9%.
nothing.
Up a tick by the year 2026. The statement
SPY
now
is
says the
popping.
Fed is firmly
The fuck is going on with the
committed to
Nasdaq right
supporting
now?
both maximum
The Nasdaq's doing
and
nothing.
The 2%
Nothing
inflation
right now.
target before, and for many months before this, the Fed had relied
Oh, you know what?
solely on saying
The
it was
Nasdaq
focused
might
on
be
the
delayed.
inflation
Yeah,
target.
the
committee
Nasdaq
has
is delayed by
gained greater
15
confidence.
minutes.
The statement said that
So
inflation is moving
Dow Jones
to
is good,
that
SPY is
2%
good.
target, and risks to both sides of
Yeah.
the mandate now are said to be roughly
Congratulations to the
balanced.
42% that said
On
50
the
basis
economic
point cut.
description, the
Jerome
economy's
Powell came over to
confidence
my
measure
fucking
says at a
side.
solid
Yeah,
pace.
there we go.
Job gains, however, have slowed. Inflation making further progress towards 2%, but remains elevated. It's seen declining to 2.3% this year, 2.1% next year, and hitting the target 2% by 2026. Unemployment, the outlook for unemployment did tick up. I think that's important to what the Fed said here and what it did. Up 0.4 to 4.4%, 2 ticks higher than it is right now. Growth pegged
My
at
ape token isn't
2%,
profitable yet.
slightly above the 1.8 potential, well into 2027.
There we go. 197%.
9 officials in the dot
Nice little
plot
profit there.
wanted to do 75 basis points or less this year.
And ape's coming back up
and
to my
10
long level.
wanted to do
Okay, good.
100 or more. So it may have been a very close call as to what was actually wanted around the table in terms of 25 or 50 today.
It was 3 to 4
They
vote.
decided ultimately with 11 voting in favor of the 50 basis point rate cut. Tyler.
Oh, 11? Oh my God,
Steve,
how many
stick
people are in
around
there?
as we get back to our panel for some reaction. Claudia, you were the one who said.
Yeah, there we go,
and that's what
baby.
happened here. Clearly, maybe more emphasis on what's going on in the labor market than on inflation.
Right. This is absolutely a vote for the dual mandate. And so trying to protect maximum employment. You know, things are good right now. They're not pointed in a good direction with the labor market, but that's why you get out ahead of it.
Uh-oh.
So
Well, now we're seeing more volatility here. Let's see.
It's showing that the Fed is taking the risk on the labor market side very seriously, and that also shows up in the projections, right? They are trying to move. This is not the last cut. So it's a really important recognition of what we've been learning about the labor market, and the Fed is reacting.
So, David Kelly, they're opening big, and you think that another.
And just so you guys can see, this is the breakout level we're trying to get above right here on the daily chart.
Lower than we are today. That would imply then that there would be two more cuts of 25 basis points, or at least one.
Yeah, no, I think we're probably.
Uh-oh, we're coming back down a little bit now.
Stage. I mean, I would have preferred they went 25 basis points today. Obviously, it's a very close call in futures markets. But the important thing to recognize is
swoosh it, Michael. Shit, I'm already out of my trade. I don't got to worry about shit now. I told you guys I wasn't going to hold it for long. Okay, but I was levered up 200%. I got longs here. I got swing trade longs in case things turn out well over the next few days.
But that's the message.
But I think this is fantastic news.
The reason I thought,
you're basically selling. So basically, what happened was a whole bunch of bots just traded, and they all just sold up here. That's basically what happened. And now you're seeing kind of a round two type of take effect here. This is what I meant by volatility can really fuck you up. And so my jump X trades basically fell flat. I did not make any money off of those. The trades on weeks with Ethereum long 200x leverage. That was a fantastic trade right there. Fantastic. I enjoyed that.
Reigniting inflation.
Let's see.
Look, I mean, to some degree, it certainly could, but it really depends on what happens to the labor markets. Look, I see this as a three-dimensional problem for the Fed. Number one, where do they see the neutral policy rate being? Number two, how quickly do they want to get there? And number three, what is the employment situation? Is the employment situation going to
done with work for working today? I still got some stuff to do.
The Fed is signaling today.
I'm going to go smoke a cigar tonight, actually.
That the unemployment rate could start to accelerate higher. So to me, yes.
And hey, Larry, happy to see you.
Something that might unanchor inflation. I think it's way premature to say that. I don't think that's what's going to happen. But what it does signal, signal that they are worried that there could be a faster pace of layoffs and job losses and things like that. So I think the markets, while they may be happy that the Fed cut interest rates, they might have to ask the question as why they're going as fast as they're going and what is the cause for that concern. So I think it is a little bit of a double-edged sword here.
Claudia, what about that very interesting point that David made, and that is
I'm going to steal this guy's tweet.
Perversely,
not the exact tweet, but
sometimes cutting interest rates can slow down activity as people wait for interest rates to go even lower.
There we go.
Right. Well, the first thing I'd say is we know from this cycle already that the comparisons back to history are going to be really tricky. We haven't had a kind of easing cycle like what the Fed has started us into in a very long time. So and we've had a lot of what are Fed interest rates even doing in this cycle. So I think there is that issue. Now, markets, and this will be a very important part of the press conference today, is this messaging from Powell about going forward with interest rates. You can get that quote unquote forward guidance and have the market rates look out ahead. And this is a Fed that with a 50 basis point said we are going to do this. And we are going to be
the dollar index is taking. Well, I bet it's been.
And I think that can show up in market
dollar index is going down. Yeah.
Help with that, behavior changing.
David, one aspect where I'm very curious about how markets and banks react is Americans.
I'm going to pause it for a second. Do you see how surprised CNBC was? I think they talked themselves into that 25 basis point cut, but you saw the odds were going into the favor of 50 here.
At the margin, take a few dollars out of what's been a very lucrative place to park cash.
Well, I don't think it'll have that effect. I mean, I do think that it squeezes the income of older Americans just a bit. But what it does, I think it will introduce the question of how much is the economy slowing, and that is not necessarily good for the equity market, no matter how much it, it positively responds to what they've just done today. I mean, as I say, I think the economy is strong enough to handle this. But overall, I think the messaging is very important from here. So in the press conference, it's very important that Jay Powell stress the level of comfort with inflation. Look, we've got lower gasoline prices down 70 cents year over year. We feel good about growth, but honestly, inflation's doing even better than we thought it was. So that's why we can move today. If he stresses progress in inflation rather than worries about unemployment, then he'll do the economy a great service. And I think that'll make this a much safer cut.
Steve, Claudia made the point, I invite you to pick up on whatever thought or tangent you would like, but Claudia made the point that this is a different a different circumstance. We haven't had this kind of initiation of a rate cutting cycle in a long time, certainly not under these kinds of circumstances. When we've had rate cutting cycles before, it's been in response to economic crises like the pandemic, like the financial crisis in 2007, 2008, 2009. Here it's a different set of circumstances. Economy's pretty good. Very little sort of idea that a recession is on the horizon. Talk to me through that. Talk me through that, if you wouldn't mind.
Well, Claudia studied history. That's why she's famous in our world. I've studied history.
Larry, that'd be crazy.
And I can tell you with experience that nothing works, Tyler, in terms of comparing this to any of the cycles. There have had a complete lack of analogs for the world we're in right now. Fundamentally, it seems like what the Fed decided is this was really a transitory supply shock, somewhat exacerbated by somewhat loose monetary policy.
Transitory, he dare use that word.
But if you hear the Fed talk now, much of the blame ends
Here's
up
the hourly
being
chart right
on
here.
the supply side shock that kind of worked itself out. A lot of that created a background of why the heck are we so high if it was a supply shock and it's largely worked itself out? We have another half a point, maybe a full point to go, depending upon how you want to measure it. And we can get that done by being restrictive, but we don't have to be this restrictive. What Powell took, I would say, Tyler,
Boeing
is
sort of
50
furloughs.
basis points of what could be an easy 100, 150 that the Fed can take and do so while remaining restrictive and not even be in danger of sort of further stimulating the economy. The game now is going to be restraining the market.
I would love a transitory
and
hat.
its forward pricing of where the Fed is going, because that forward pricing, Tyler, as you know, works itself into the real economy through the floating rate mechanism that allows businesses to go out and borrow at tomorrow's yield. And that's where the stimulus comes from. So now we begin a game of the Fed on top of the horse, holding the reins and figuring out how much to let out the reins and how much to pull back.
The new countdown is for Jerome Powell's press conference. That's going to be happening in about 19 minutes, okay?
Ways that move's already been made, and we'll see how markets react. And on that point, too, Karen, I just wanted to point out, you know, if you told me that they were going to cut 50 and asked me what I thought the stock market reaction would be, I could go either way. The reaction so far has been positive, though, and that seems to be a sign that they're taking the kind of this will be stimulative on the margin and keep the soft landing intact story, as opposed to the we're at the beginning, like Tyler was saying, of a recession, and as we've seen with past cuts of this size.
Yeah, I think the market's signaling that this is a step in the right direction for the soft landing. I want to pick up on one thing that Steve Leisman said, because I think the eye on the prize here, what we need to be focusing on is where the terminal rate is. Where they begin this journey to cutting interest rates is an interesting point to talk about today. But what the markets are going to focus on ultimately is where do they end. So the fact.
Okay, that's enough for that for now. I'll put it to the side. Basically, as soon as the Jerome Powell comes out, we're going to be watching his press conference from beginning to end, and you will not hear me actually say anything during that time. Right now, they're just kind of doing their discussion. They're talking about it and stuff like that. This was a surprise move, I think, for a lot of people on the mainstream news networks, the legacy media. Whether it be Bloomberg, CNBC, or Fox Business, they were all kind of talking about how they had to do, most likely, they were going to be doing 25 basis points. But I think for those of us in the camp where we kind of feel like, hey, the economy's slowing a little bit faster, don't try to lag into this. Don't try to slow step away in the cuts. They kind of popped it up here towards about 50 basis point cut, basically. Since the move happened, we're now back to being a little bit flat, okay? So what we saw happen was a pop. I sold my positions. I shouldn't have sold my Ethereum, actually. That was a mistake on my part. Look at it. We're back down to these low levels. But again, I just wanted to make sure I lock in the profits that I had because that was a big pop. So right now you're seeing Bitcoin had a big move up, tried to break out again. Still a lot of resistance coming up for us. The SPY, same exact thing. Dow Jones, same thing. The NASDAQ has a 15-minute lag, so in about 2 minutes' time, you're basically going to see the NASDAQ do a crazy pop. That's basically what you're going to see. And that's because for whatever reason on TradingView, the NASDAQ is always delayed. The Dow Jones is live, the NASDAQ is not, and the SPY is live. But the NASDAQ, yeah. Let's see. Oh, actually, there's some more news coming out. Another 50. We can watch the NASDAQ do this pump here in a second. All right, there we go. Okay, let me pop that over there. Make sure the audio is still working. Oh, it should come out in a few seconds. There we go. Oh, the sound was muted on CNBC. Oh, my bad. It doesn't matter too much. Basically, all they were talking about is the move that happened and how the market's still kind of iffy about what's going on. Let's go back over here to Bitcoin, though. Now, Bitcoin's just going to be volatile. Look at that. We can have the 15-minute chart shows us a little bit more information there. There we go. I'll make sure the volume's on for that next one, though. Some people trying to sound smart. Yeah, my Tesla put is up 50%. Tesla, well, for me, one of the reasons that I haven't really been owning much Tesla over the years, and I kind of just swing trade it for the most part, is because have you seen those Chinese EV vehicles? They're absolutely fantastic. They're out of this world. Just the luxury, the quality. They look amazing. And eventually those are going to come over here. And when they do, they're going to be a very affordable alternative to Tesla, Rivian, all the other companies out there. They're going to be great and fantastic. I'd rather buy one of those like nice little $10,000 EV cars. If America wants EV cars over here, they should allow the Chinese cars to come over. But that would hurt our auto industry, of course. But I'm saying, like if you want to have Americans drive electric vehicles, you have to make it affordable to them. EVs are not really affordable cars for the average consumer at this point. So there's a lot of volatility. And I'm looking and it says 11 votes in favor of decision. Governor Bowman dissented, preferring a 25 basis point cut. So I think that might be out of 12. So like 11 out of 12 people said they wanted a 50 basis point cut. That is pretty interesting there. And you're seeing the SPY bounce back up now. NASDAQ's now doing its little pump here. And we're seeing the Dow Jones pump back up here as well. So the volatility, it's bouncing around a lot. Generally speaking, we're still higher, I guess, at this point here. So baby steps. And we have about 13 minutes until we have Jerome Powell come out. The market is back on the move here, and that's what you guys want to see. What's going to happen after 60 minutes later? That is Jerome Powell is going to be talking here. Alt's also growing here. Let's take a little bit of a back step here. So this is Bitcoin. This is Ethereum. Solana. Dogecoin. Dogecoin popped up quite a bit here. That's a beautiful move. WIF. Bonk. Miro. Baby Doge. Not doing much. Baby Doge had a big move earlier. STMX. Book of Meme, Shiba Inu. Shiba's moving up a while too. Pepe, Floki. You're seeing some really good moves here. Milady's not doing much here. ADA is making a move. AMP is fine. Ape is fine. Maybe my Ape is profitable here. No, I'm still down about 13% on this trade. It's only $13 though, but I'm trying to hold this for a swing trade here. And then the Arbitrum trade right here, that's still down about 17% here. Now maybe I'm happy I closed that Ethereum trade. Ethereum's about to pop off again. So yeah, kind of where we are. Anything actually doing a really surprising move? FTM is still moving up higher. KDA, it's not doing much here after that big move yesterday. Ocean making a move. We were just talking about Fetch AI a few minutes ago. Fetch AI is breaking out here. Altcoins are really enjoying this move right now. Altcoins specifically. Are there any stocks making some big moves here? CVS is up a little bit. Avgo's up a little bit. Tesla's up 2% right now. Warner Brothers is up 2% right now. How's Tesla looking on the 12-day? Tesla looking like it couldn't possibly make a breakout here, but it's had too many false breakouts as of late. Momentum is still okay. Yeah, Tesla momentum is still enough for it to have a breakout up to maybe to the 280s or something like that down the road, but there we go. There we go. It's trying to do a nice little round 2 here. Nice little round 2. Gold pump. Oh, gold's going to be doing fine. I own gold. I'm not even trading it. I'm not even swing trading. I'm just holding it right now. I almost want to go to Costco and buy some gold bars and be like, hey man, I need some gold bars right now because I don't trust it. I don't want to have it online. Dollar index is still going down. Hey, solid. But let me see. Yeah, it's still breaking down right now. Oh, we're about to break down below 100 actually. Look at the weekly chart. We're breaking down below the 200 weekly moving average. We have not been below the weekly moving average, the 200 weekly moving average, since about January of 2022. That's right as we started raising rates and stuff. So yeah, the dollar index right now is crumbling. That's a good sign for Bitcoin here as well. But you can see that volatility here. Bitcoin basically snapped up 1.5%, like basically $1,000, came all the way back down, and now we're back up to being like about $600 up. And we're still going higher here, so that's a nice move. Jerome Powell, what, 10 minutes away? Not too far. Bull run is coming. You're seeing everybody very excited. Go over here to, there we go. FOMC, it's number 4 on trending on Twitter. It should be higher here, but I think because there are little bombs going off in Lebanon, maybe people are talking about that quite a bit. Oh, it's actually a Federal Reserve. Yeah, number 5 right here. Let's go through some tweets. The Federal Reserve has cut rates by 50 basis points. The first time, yes. I found a perfectly preserved Taco Bell receipt from 1999 in a library book I was scanning. Taco 69 cents, nacho 69 cents, Pepsi 89 cents. Oh man. Abolish the Federal Reserve. Oh man. Rates by 50. This is unprecedented real estate investors right now. Oh yeah, real estate investors, yeah, they're going to be doing great. Federal Reserve, Powell cuts interest rates by 50 basis points. I'm not going to keep on reading these because they all say the same exact thing here. 50 basis points though. Let me scroll down here. Let's see.
Seriously, that it wants to every year move from the Fed vantage point, a 50 basis point rate cut. That is bigger than it had been originally expected, on the bigger side of things. When you think about this move from the Fed, this is an historic move, the first rate cut in 4 years from the Federal Reserve, and now it is sending a very clear signal that it is taking this fight seriously, that it wants to preserve the jobs market. In its statement, it makes that clear that it is making a half-point rate cut to try to preserve the jobs market, with inflation now closer to its target. So again, Terry, a lot of division going into this. The Fed went bigger. It went with that half-point rate cut.
Right, got it.
All right, so oops, let me get at this. So basically, I saw your question right there. Do I think altcoin season is going to happen in Q1 of 2025? Basically, when we're looking at altcoins and stuff like that, let me just find a random ape coin, like let's say ape token here, okay? Ape token's been going down a lot, right, for a while now. Or you look at something like, oh, hold on, breaking news. No, nothing, okay, nothing crazy. Maybe even something more realistic, like Ethereum Classic. There you go, it's been kind of more flat. When you're looking at moves like this right now, and you're expecting an altcoin season to come along, let's say Q1 2025, whatever. Right now, I'm just dollar cost averaging as we're at these lows right now. And then if we do manage to have that pump, I will have a good price. Until then, I'm basically just waiting for different tokens to have some bullish weekly charts and monthly charts. That'll get me more excited about what's going on. But right now, it looks like if we do have an altcoin season next year, we won't be at these prices for much longer. A lot of these tokens, like Ethereum Classic, which is about 18, 17 bucks right now, they'll be around like 27 bucks at the start of the actual altcoin season, and then from there, they're going to have some big launches. Think about how things were kind of rough back over here, right? And then we eventually started pumping back up, but once we pump, we never just come back down to get another buying opportunity here. Let me go back over here to the 5. I really want to see how the market's reacting to this, because right now Bitcoin's clawing back up here. It's clawing at this point. Oh, here's the projections for
Let's
the
talk a
rate
little
cuts
bit
as
about
well.
interest rate sensitive sectors, and I'm thinking mid-sized banks, most especially.
Right.
Large banks. What happens there?
Well, this may be a contra opinion, but I actually was at Bank of America down the street for a number of years, and my take on banks is avoid. I think what's going to happen is the repricing of loans, now that the Fed has cut, is going to hurt their top line revenue number, and that cost of
Net
goods
interest
sold.
income.
Yeah, the net interest income is going to come down because they can charge less.
All right, there we go. All right, let me go back over here very fast. I just want to check out that dollar index again because that dollar index is still coming down here. Look at the 1 hour chart. I mean, it just broke down below support here. It's coming down hard. And pop this back open here. Russell 2000. That one's also having a breakout. SPY is back to being positive. The NASDAQ is back to being good. The Dow Jones is back to being good here. That was a lot of volatility for a short amount of time because, okay, again, we had a bunch of hope. It got kind of crushed before our eyes, and now we're just slowly building up a nice support level to start grinding back up here. That was a very volatile few 15 minutes. Again, we got like 5 minutes left, guys, until we have the Jerome Powell come and speak. I'm not going to be talking through that. Like I said, I'm actually probably going to be going over and making it full screen for them. No, not full screen. Yeah, we'll have it be all over the charts because I want to see exactly what's happening with the charts at the same time. So, same with you guys. Is that Mr. Wonderful that was talking? No, it's some guy. I don't know his name. I'm not going to play the audio for you guys here, but it's that guy. I don't know who he is. They need to start saying people's names at the bottom of the screen. Let's see. And they see how they got it ready? We're waiting. As soon as he comes out, I will be ready, and we're going to listen to him talk with his soothing, transitory voice. And we're going to see what happens. Because you are going to see some big market moves. He can move the market right back down. He could definitely do that. Hopefully he keeps the market moving up quite a bit here. Tokens right now are kind of mixed. If you go over here to coinmarketcap.com, you can go over like the last hour. There's some tokens that are down. Or actually, let me go over here to the actual main page. There you go. Some things are up a little bit right now. I guess it really hasn't updated just yet. Oh, there you go. Gala's up 5%, H&T's up 5%, WIF is up 4%, Tau's up 3 or 4%. You got some good movers here. You also have, nothing is actually down right now. Nothing on the top 100 is down except for some stable coins, and stable coins move up a little bit, down a little bit. They're not really doing too much here. So altcoins are very much excited and happy about what they're seeing at this point. But I mean, if we just take a quick little look here at the 1 second chart, let's just back up a little bit. That's what happened. You had a 1 second of somebody dumping right here. It got eaten up, and the volume just kept on pumping it higher and higher and higher. We sold it somewhere. We sold our position somewhere around here. We did not get the very tippy top, unfortunately. And then you saw the market come all the way back down to to right where it started pumping. And now we're bouncing back up a little bit. And we're trying to have something more of a short-term flag here and saying if Bitcoin can break out or not. It's going to be difficult here. We're going to see. I guess at this place we got more of a bullhorn popping out, but it's worth having a little bit of fun with this type of stuff. Pop that back over here. Of course, the 1 minute chart. Then this is for the SPY, the NASDAQ, all of it. You can see right here the SPY. Same basic move here. A lot of volatility just popped up out of nowhere. And at this point, we're still looking okay. We're still seeing that overall arching goodness. 2 minutes left until Jerome Powell. And I think we should... Yeah, I'm gonna open up the CNBC window in a couple seconds. And I'm just going to make it like very, very big, basically. I think something more like this. No. Something a little bit smaller. Right there. I think that's probably fine. That gives you enough of a viewpoint to see what's going on here in the corner. Right, I think that'll do the trick just for us right now. But let me hide this very fast because we have commercials going on. And hi Miami Lobo, happy to see you. Let's see. So Buffett was right to sell Bank of America. in my opinion, I don't want to be holding banks because banks did very, very well in a high interest rate environment. Like if you go and look at like a JP Morgan here, which is typically the gold standard. They keep on saying breaking news, so I can't tell if he's talking or not. No, he's not talking yet. If you go over here to why does it keep doing that? There we go. Where's JP Morgan? There we are. I mean, JP Morgan might as well be a fucking tech stock right now. I mean, look at that. Sure, it's been very volatile, but it only got volatile once we started thinking about rate cuts here. I mean, look at that. That was absolutely beautiful, absolutely gorgeous move by JP Morgan. But yeah, I mean, you go over here to some of the other banks. Do I have other banks on here? Bank of America, not as good, but you see how that volatility can really kick in. I don't want to be close to banks at all right now. Instead, I'm looking more at mid caps. So, you know, things like a Disney Corporation or something like that. Things that have smaller market caps, still big, but they can have a little bit more of a run here. Maybe not Disney because I don't like their ethics, but, you know, stuff like that. Target, right? Things that really benefit from the cash transferring from people to business, excuse me. Google, I might buy some more Google, but look at Google's been going down for a while here. Look at this. This is a weekly chart for Google. It went down 23% over 2 months. Google. Ouch. All right, but let's go back over here to this. Let's go over here. Let's go back over to the 5-minute chart. We have it on the side. I'm going to take off the timer for now, and then we're basically going to listen to Jerome Powell live. There we go. And then he's still not talking. I'm looking behind me at the same time. There's an empty podium back there. Or here. I'll just show you guys until he comes back out. There you go. You can see the bottom of an empty podium and then Loki's toys and whatnot. Oh, sorry, I'm calling Loki over here by accident. Oh, wait, actually, no, he's talking.
How much of the inflation that has taken place over the past 3 to 4 years is related to price?
It'll come in a second.
Literal price gouging.
The pandemic kicked off a lot of disruptions, supply chains, also in the labor force, labor shortages, and but I think
oh no, what happened? I'm gonna refresh it just to make it a little bit faster.
But I think we got to look back at the pandemic was the root of evil.
We have to leave it there, Claudia, as the chair is now ready to speak. Let's listen.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments.
Important.
Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months.
New
a
daily
notable
high.
step down from the pace seen earlier in the year. The unemployment rate has moved up but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.5 percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
There we go. Bitcoin's
Steve
above
Lee from
61,000.
CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision.
Good.
So that's one question. What was the second and third?
How do we make sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher than long? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%, inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment, moving to a more sustainable level, so that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard Schneider with Reuters. How close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut and left it open. And I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year? For example?
We're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start. But and I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Bitcoin is volatile right now.
Powell, Gina Smilik, the New York Times. Thanks for taking our questions.
We're having 1,000-point swings.
You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Sorry, Nick.
He didn't really answer that question, did he? You're seeing Bitcoin be very, very volatile, though.
Jerome Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
He went to ChatGPT and says, hey, ask a very simple question in a very complicated way.
So I would say we don't think we're behind. We do not think we're behind. We think this is timely. But I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably down to 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby. Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply? Or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure,
that was
as
a
I
good
talked
question.
about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018, 17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if, as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So, and policy we think is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be, their wage increases rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person as measured. It's now below around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, I could go on and on. There are many, many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months. And so what we say is, as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get a second jobs report on the day of the meeting, I think. Or no, on the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So
good question.
On the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just a slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I think we are. It's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now, some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question. You mean after we get through all of this? It's just a great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So people were issuing debt at negative rates. It seems that's so far away now. To that, but
was that?
Honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. We only know it by its works.
One more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah. So this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind. And it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Jolene.
Thank you, Chair Powell. I'm Jolene Kent with CBS News. My first question is, very simply, what message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that, the U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be, around 2% and close to 2% for some time. But we're certainly not we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
Hi, Katerina Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is? Yeah.
So housing inflation is the one piece that is kind of dragging a bit, if I can say. We know that market rents are doing what we would want them to do, which is to be moving up at relatively low levels. But they're not rolling over. The leases that are rolling over are not coming down as much, and OER is coming in high. So, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this. But, the direction of travel is clear. And as long as market rents remain, relatively low inflation over time, that will show up. Just the time it's taking now, several years rather than just one or two cycles of annual lease renewals. So I think we understand that now, but I don't think the outcome is in doubt. Again, as long as market rents remain under control, the outcome is not in doubt. So I would say it's the rest of the portfolio, or of the elements that go into core PCE inflation have behaved pretty well. They all have some volatility. We will get down to 2% inflation, I believe, and I believe that ultimately we'll get what we need to get out of the housing services piece too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. What's the likelihood of that, and how would you react to that?
The housing market, it's hard to game that out. The housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria.
Hi, Victoria Guido with Politico. Just following up on some of the labor market talk earlier, monetary policy operates with long and variable lags. And I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, I mean, business people who are actually out there doing business. So I think, I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but we might well have. I think that's not, that doesn't really answer the question that we ask ourselves, which is let's look. When at this meeting we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? It's clear that we clearly, literally, everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households? Well,
what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation. And when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. We just keep it low, keep it stable. We're restoring that. So what we're going through now really, it restores, it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on. And I think we've made real progress. We don't tell people how to think about the economy, of course. And of course, people are experiencing high prices as opposed to high inflation. And we understand that's painful.
Greg.
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. The Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in like low odds of a 50-point move like they were last Wednesday, after the CPI number came out? It there's a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
Simon.
Thank you, Chair Powell.
He's like, I'm not going to answer
that. You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. It will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about is our policy stance where it needs to be to foster over the medium term our mandate goals. Yeah, so I can't say we have a bright line in mind.
That's fair enough.
Matt Egan.
Thanks, Chair Powell. Matt Egan from CNN. I know that you discussed earlier how the Fed does whatever the right thing is and nothing else factors in. But in general, can you talk about whether or not you believe a sitting U.S. president should have a say in Fed decisions on interest rates? Because that's something that former President Trump, who obviously appointed you.
Damn, they're using this as an attack on Trump. Damn, CNN got to cool off.
To be independent, but why? Can you tell the public why you view that so important?
Sure. So countries that are democracies around the world, countries that are sort of like the United States, all have what are called independent central banks. And the reason is that people have found over time that insulating the central bank from direct control by political authorities avoids making monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office. So that's the idea, is that, and I think the data are clear that countries that have independent central banks, they get lower inflation. And so we do our work to serve all Americans. We're not serving any politician, any political figure, any cause, any issue, nothing. It's just maximum employment and price stability on behalf of all Americans. And that's how the other central banks are set up too. It's a good institutional arrangement, which has been good for the public. And I hope and strongly believe that it will, continue.
Kyle Campbell for American Banker. Thanks for taking the questions, Chair Powell. A couple regulatory developments in the past week that I want to ask you about. First, last week, Vice Chair for Supervision, Michael Barr, outlined his views for the changes to the Basel III Endgame. I'm wondering if you are in alignment with him on what those changes should be, if those have support on the board in a broad way that you're looking for, and if you think the other agencies are also fully on board with that approach. And then yesterday, other banking regulators.
You know what? Hold the second question.
Okay, sure.
Let me we'll give you the second question. So the answer to your question is that yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is, that's happening with my support.
Is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. We don't have a calendar date for that. And as for the other agencies, the idea is that we're all moving together. We're not moving separately. So that I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment. And then it'll come. The comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
And then yesterday, there were merger reform finalizations from the other bank regulators. What does the Fed have to do to align itself on merger?
I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth. Even though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the job market and growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage, so very hot labor market, and we had inflation way above target. So, that said to us, concentrate on inflation, and we did for a while, and we kept at that. The stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today I think we made a good, strong start on that. I think it was the right decision, and I think it should send a signal that that we're committed to coming up with a good outcome here.
Vulnerable to a shock now that could tip it into recession?
I don't think so. I don't. As I look. Well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels. So I don't really see that. No, thank you.
Thank you.
Oop, wrong one.
Okay, that was Fed Chair Powell following the decision to cut interest rates by 50 basis points. Perhaps a bit of a surprise today.
There we go. So yep. Let me go over here very fast. All right, so that's it, everybody. Hope you guys all had a great day here. The Bitcoin is heading down a little bit. I'm seeing it going back down to around $60,000. I'll kind of show it to you guys right here very fast. It was a very volatile day. You saw a big, pretty much spike here. At this point in time, the daily chart, Bitcoin is pretty much where it actually lasted here. We still have about, 4.5 hours left until the trading day is over, so just be careful if you guys are day trading. This volatility is going to go back and forth for a while here. If I'm lucky, I am going to stream a little bit later on tonight. It is not going to be at the typical 5 o'clock time. I am thinking about something way, way more later, like after midnight or something, especially if I go out to smoke cigars. Maybe I'll go out and smoke cigars tonight, and I'll smoke while I'm smoking Thursday and Friday, so maybe not tonight, but I'll be watching the charts here. If you guys have any questions, make sure to leave them, leave them here and whatnot. If you guys want to help me out, please make sure to subscribe, like the video, that type of stuff. And I appreciate you guys for watching. We've been streaming for about, I don't know how many hours now, about 3.5 hours now. So it's been a little bit of a longer one here, but 50 basis point cut. The market seems to like it enough, and we're going to see what happens next here. Again, we are going to have some more volatility for the next few days. Get used to it. Things are going to have to kind of change up here for a little bit. Money is going to be flowing out of some tokens or some stocks and moving into other ones. You can think about the easy way of moving out of banks and moving back into tech, or maybe moving into mid caps, basically. So see you guys a little bit later. Thank you guys so much for watching. I appreciate all of you guys here. Miami, Kilo, Wilder, SNX, all of you guys here, Richard and Charlie. Thanks guys so much. And then Loki says goodbye. I don't have any more treats for him because he ate them all. Loki, oh, there he goes. Yeah, so he's happy.